Everybody needs somebody.
At Amazon, find everything you need to make the kids smile this Christmas. You can get items like the LOL Surprise 2-in-1 Glamper, Monopoly with electronic voice banking, and the Barbie 3-story townhouse. All with low prices and free UK delivery on eligible orders over £20. So there'll be more, and more.
Wow, thanks, Mum and Dad.
Amazon, delivering all you need for the kids for less.
Conviction, in particular if you're going to pay up, in good earnings visibility and quality, and so that's really our message, rather than you need to sort of overweight specific subsectors.
Well, you've been honest and candid all year long, Tony. As the stories evolved, we appreciate your guidance as always. We'll see you soon.
Thanks for having me.
Tony Saganaki.
Well, when we return, the FTC mulling going after Facebook ahead of talks. It's looking to merge its social media apps. Former FTC Commissioner and former Facebook Policy Advisor Moselle Thompson joins us to discuss. Squawk Alley's back after this. Don't go away.
Johnson & Johnson.
For the independent bookseller who found you that first edition. For the baker who brings the smell of freshly baked bread to your door.
And for the barista who never needs to ask your name.
We've all got a part to play.
Every little tap keeps your high street alive.
And helps your communities thrive.
So if you love where you live, shop small.
Shopping on your local high street can make a big difference. Shop small. Only by American Express.
Ho, ho, ho. Who's made a list this year?
I want a new phone. One with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
Sideline, the Van Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Welcome back to Squawk Alley. NBC Universal CEO Steve Burke announcing his retirement from our parent company. Julia Borston has the details for us. Julia.
Morgan, that's right. Steve Burke is stepping down from the CEO role on January 1st. He'll be chairman of the company until August 14th after the Tokyo Olympics, after which he will retire. Now, appointed new CEO of NBC Universal is Jeff Shell. He will report to Burke until his retirement and then directly to Comcast CEO Brian Roberts. Burke has been CEO since 2011 when Comcast closed its acquisition of a majority stake in NBC Universal. From 2011 through last year, NBC Universal has nearly doubled its earnings with the fastest annual growth rate of any major media company. Burke secured the broadcast rights to the Olympics through the year 2032. He engineered the acquisition of DreamWorks Animation, and he created a cross-company program called Symphony to enable the studio, theme park, and TV networks to collaborate. Now, Burke's replacement, Jeff Shell, is a 15-year veteran of Comcast. He's worked with nearly every single part of the company, and he has key international experience. In January, Shell's job was expanded to be chairman of NBC Universal Film and Entertainment. Before that, as chairman of the Universal Film and Entertainment Group, the movie studio built out its franchise strategy and recorded record profits and record box office. Now, before that, he had no movie experience. He had been chairman of NBC Universal and International. Before that, president of Comcast Programming, growing its network's reach and profitability. Right now, Chef's priorities will be focusing on the launch of Peacock, which is coming up in April. That's the direct-to-consumer streaming service that they have been working on, as well as maximizing the value of NBC Universal's brands amid cord cutting. As for what's next for Steve Burke, he'll continue to serve on the boards of JP Morgan as well as Berkshire Hathaway, and he wants to spend more time at his place in Montana. Guys, back over to you.
All right, Julia, thank you. And meanwhile, European markets set to close soon. Seema Modi joins us with a look at today's action. Seema.
And John, European stocks hitting a record high, on track for its fourth consecutive month of gains. This is in response to that phase one trade deal and Boris Johnson's victory in the UK election that puts his Brexit plan on track. Bank of America Merrill Lynch predicting a 4% upside in European stocks between now and next March. And Goldman Sachs this morning saying that it is bullish on UK banks and home builders. And you can see those banks are up by around 4 to 5% in early trade. Now, another story involving China and Europe over the weekend. Premier League club Arsenal under fire today after distancing itself from one of its players, Mesut Ozil, over his criticism of China's treatment of the Uyghur ethnic group. Arsenal saying Ozil's comments were entirely his and that it, quote, adheres to the principle of keeping out of politics. Now, Ozil's criticism was met with outrage in China, including a decision from its main state broadcaster, CCTV, not to air Sunday's match between Arsenal and Manchester City. And it follows a similar move by the Chinese to block the NBA's Houston Rockets basketball game after its general manager, Daryl Morey, tweeted support for the Hong Kong protests. Carl?
I can see China's reaction to sports leagues around the world is now a global phenomenon. Really interesting, Seema. Thank you very much, Seema Modi. When we come back, the FTC readying antitrust action against Facebook over its possible combining of apps. We're going to talk to former FTC Commissioner Mozelle Thompson about that move from last week. In the meantime, Dow's up 170. Squawk Alley's back in a moment.
I heard you the first time.
Christmas. A time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
The extraordinary sale is now on at Bicester Village, with up to 60% off the recommended retail price at participating boutiques until the 24th of December. Enjoy luxury for less at Emma Bridgewater, The White Company, Molton Brown, The Creuset, and many more. With free parking, all-day festive dining, and restaurants open late, it's the perfect time to do your Christmas shopping. The extraordinary sale at Bicester Village.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Tonight, TuneIn has your Monday night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith into touch. Smith over tackle. Into the end zone. Traquan Smith.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 Podcasts, Season 6. Listen now to 30 for 30 Podcasts on TuneIn.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Rescuers scrambling to find at least 7 people trapped inside a 3-story building that collapsed in a strong earthquake in the Philippines. At least 5 people died in Sunday's 6.9 magnitude quake. Harvey Weinstein says he is a pioneer in advancing the careers of women in the film industry. In an interview published in the New York Post, he says he made more movies directed by women and about women than any filmmaker for the past 30 years. Weinstein faces a January 6th trial on rape and sexual assault charges. After a fierce backlash, the Hallmark Channel has reinstated ads featuring a same-sex couple that were originally pulled from the cable network. The ads from the wedding planning company Zola feature a lesbian couple celebrating their marriage. Both NBC Universal and Comcast Ventures are investors in Zola. And eating a healthy diet can keep your cholesterol in check. That's according to a new advisory from the American Heart Association. Scientists found diets that emphasized fruits, vegetables, whole grains, and poultry are naturally low in cholesterol. That is the news update this hour. You're up to date. Carl, I'll send it back to you.
All right, Sue, thank you very much. Earlier this year, Facebook outlined plans to make access between its apps seamless. Now those plans may be under threat. The FTC reportedly planning potential action focusing on how the company plans will affect consumers and its competitors, potentially tightening its grip on billions of users. With us here at Post 9 is former FTC Commissioner, former Facebook Policy Advisor, Moselle Thompson. Good to see you back. Welcome.
Good morning.
Do we believe this is true?
Well, the answer I would probably say is yes, but let's talk about this for a second. You know, when you have any sort of investigation, the regulatory agencies begin by surveying the market, asking your competitors and everybody else what's going on out there. I have no doubts that some of the competitors, including some who are mentioned in this Wall Street Journal article, have asked the FTC to weigh exactly this remedy because they would like to see it happen. I think the FTC is probably weighing a lot of different things, but I'm not sure that it's the end of the discussion.
But you're not suggesting the agency is being used as a cudgel between rivals, are they?
No, that would never happen. Are you kidding? No. But I think that, look, companies do what they think will be to their strategic advantage. And I also think that, remember the last time I was here, I said it's also political silly season, so you have a whole bunch of people who have political interests too. So it's an interesting time. I think the burden is still high for the FTC. Don't forget, if they want to go in for a preliminary injunction, you have to show that there's some sort of emergency. Let's talk about what's happened here. The Instagram was bought by Facebook 7 years ago, and WhatsApp 5 years ago. Now you're going to have to, and there's already a lot of things that have already been commingled, scrambled the eggs already. Now I know we've talked about this interoperability proposal, but that's not the only thing that they've worked on together. So in order to get some sort of emergency, you have to show something so extraordinary now that it warrants the court intervention. And if the court intervenes now, that means the FTC would pretty much have to put on their principal case now. I'm not sure they're ready for that.
At the same time, you can't unscramble this egg, right? I mean,
right.
once they actually join the data in these platforms, you can't really separate them very easily anymore, because then they've got models based on that commingled data. And given all the problems that there have been with data getting leaked, data getting used in ways that Facebook didn't intend, can we afford to have them move forward with this when there are questions about it?
Well, you have to begin to think about what's the consumer benefit versus consumer harm. I
can see the harm.
Well, I'm not sure I can. I think that if you look at some of the benefits, I can see how there could be some really consumer benefits. At this point,
to mingling your Facebook data and your Instagram data.
At this point, there's a lot of stuff that already is integrated. Don't forget the ad models are already based on Facebook's ad model.
But what does Moselle get out of that? Why is that better for you?
To the extent that it's very easy for me to transfer data and for Facebook and Instagram to know what it is that I want and what I don't want. It would make it much easier. The second thing, it also, don't forget, this is a service that I'm not paying for. So that it enables the company to keep providing that service. I can decide whether I want to participate in that or not. And I'm sure that one of the challenges for Facebook and for Instagram is to give people choices about what happens to them. And so that's still something that I think is an opportunity.
I can't help but think there are many. I mean, there's so many cooks in the kitchen when it comes to scrutiny of Facebook right now. Right. And really, many of these big tech companies that we've been talking about through similar lenses in general, whether it's lawmakers, whether it's the FTC, DOJ, states taking a look as well. How is everybody going to work together? Are they or are they not? And how does this now, I guess, essentially muddy the waters? Like, what are the next steps investors need to be watching?
I think the investors need to relax a little bit, because I think...
They seem relaxed. The stock's rallying this year.
It's hard for me to think that something can happen immediately. As you point out, there are a lot of cooks in the kitchen, but one of the things that generally happens is that the states and the feds tend to work together so they don't duplicate their effort. Now, I don't know, I'm sure that they've already met to discuss that. I don't know whether this particular proposal is one that will throw a wrench in that or not. Okay. But it seems to me that in order to have an effective investigation and prosecution, if they think it's necessary, that's actually going to have to take some real thought and strategic decisions, not something that can happen really quickly.
Do we think that the fact that FTC has already formalized fines against Facebook, right, does that make them, do you think, more aggressive in regulation or not?
No, because I think it's a different side of the equation. It's not it's the privacy side, it's the consumer protection side, not the antitrust side. That's a different kind of animal. They're two different divisions. And so the fact that there's already been a fine is not necessarily determinative of what the outcome is here.
So where do you think that leaves the FTC as far as how much room they have to make this call? And justify it. You seem to be arguing that I'm still not clear on the benefit to Moselle in mingling that data. It sounds like an advertiser benefit and a Facebook benefit, but will it be a stretch for them to say, hold up, don't mingle this yet, we've got some decisions to make?
I think that they have, for the FTC, the challenge for them is if they decide to proceed right now, and they claim that there is some sort of emergency, and a court decides that there's not an emergency, you have to show that there's not only an emergency, there's a likelihood of some positive outcome once you engage in litigation. They've only been doing this for a fairly short period of time. There has to be a slam dunk case in order for them to do that right now at this early stage. And I think that one of the things you always weigh when you're going through a PI, a preliminary injunction, is whether, if you're not successful, what likelihood it's going to have a negative outcome, because you're in front of the same judge later on and looking at that case. That's a real challenge for them. Now, I don't have what they have in front of them, so I don't know. But that's what I think the challenge is.
Okay. That's still good. That's good insight as to how these regulators might be thinking. Thanks, Moselle. Good to see you.
Thank you. Happy holidays.
Same to you.
You too. When we come back, the terror queue. We'll take you inside Google's largest content moderation facility. But first, Rick Santelli, what are you watching today?
You know, it certainly seems like there's a global wind that's blowing many of the indices around the globe higher. What does it mean? Have we actually reached the bottom and things are going to open up? We'll discuss all the possibilities after the break.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
You never know where life will take you, which is why the new BMW 3 Series Touring is perfect if you're all packed up for, or escaping to. It has extensive storage and an automatic tailgate, handy if your hands are full. And it even has an optional intelligent voice assistant to help you at every turn. The new BMW 3 Series Touring. Book your 24-hour test drive today. Test drive subject to status and availability. Participating retailers only.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Let's get over to the CME now and Rick Santelli for the Santelli Exchange. Hey, Rick.
Good morning and thank you. You know, there's so many things that we have labeled uncertainty on over the last several years, but I really don't question the fact they are uncertainties. What is very difficult to handicap is how those uncertainties could be measured in terms of how much inertia, how much downward force they put into the marketplace. That's really all that matters, because if we have this feeling that whether it was Brexit or whether it was the trade infractions or the tariffs or all these things put together, if they're weighing on the global economy, what happens when they disappear? And that really is a big point. You know, there's an old adage on trading floors, buy rumor, sell fact, or sometimes it's sell rumor, buy fact. But the issue remains that when we know something, how does that change how the market interprets it? Well, it starts out with anecdotal evidence. Let's go to the whiteboard. Today we had the Home Builders Sentiment Index from the National Association of Home Builders. This is December, so it's real time. 76, best level since June of 99, 20 years. And it doesn't end there. We can see anecdotal evidence all across the globe. And it is slowly disappearing. As a matter of fact, look at a one-month chart of the FTSE, the UK stock market. Now, it shouldn't be shocking that it had a nice big move to the upside after Boris Johnson's very solid victory. But it really represents, in a way, more than that. Now, certainly it's not on contract highs, but all throughout Europe, investors are becoming tantalized. They're teased by this notion that if bottoming action does occur domestically and globally, well, you want to jump into those markets that have been beaten up the most, have performed the worst. So you try to look for those multiples, their expansion. So multiples multiply. Has it occurred yet? No. But I can tell you, if we are impressed as I was about how the markets acted in the rear view mirror in an uncertain, ridden world, I can't imagine with the dynamic of capital flowing with the hopes that the global economy is bottom, whether some of the news in China, the foreign exchange markets, that this is the time to potentially be getting in. And what would be the trigger for that? Let's watch the rest of the bourses in Europe like the CAC and the DAX. If they get a second wind, I'd be very shocked if investors don't start to reverse some of the money going into the sovereigns and go back into the equity markets. John Fort, back to you.
All right, Rick, we'll keep an eye on it. And as we head to break, I want to mention Intel acquiring Israeli chip startup Habana Labs for $2 billion, strengthening its AI portfolio, perhaps shifting its strategy, and the stock is actually up almost 1%. Plus, Grammy-nominated artist Fat Joe dropping some knowledge on music's place in today's business landscape. Squawk Alley's back after this.
If you've tried...
Ho, 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 who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today. Tonight, TuneIn has your Monday Night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith, it's touch. Smith double tackle into the end zone. Traquan Smith!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back to Squawk Alley. Toxicity at YouTube isn't just an online phenomenon. New reporting by The Verge detailing tales of suffering for some people at YouTube's largest content moderation facility in Austin, who are tasked with keeping the site free of violent extremism. Here's one former moderator's account.
I was having nightmares. I wasn't sleeping. I had spent multiple days just crying in the bathroom. And, you know, I was having all of these panic attacks. And my work productivity just dipped. And finally, you know, my manager was like, listen, we really need you to step up your productivity game. And I just snapped and I turned to him and I said, do you understand what we're looking at? And we're not machines, we're humans. So we have emotions, and those emotions are deeply scarred by looking at children being raped all the time and people getting their heads chopped off.
Joining us now is the reporter behind it, Silicon Valley editor at The Verge, Casey Newton. Casey, thanks for joining us today. This is certainly a topic more broadly, content moderation, that you have been breaking news on all year long. Tell us a little bit more about what you found out is happening at YouTube.
Yeah, so, part of what I've been trying to understand this year, one of the thoughts I had was maybe if you just paid these moderators better, gave them better benefits, the work would be easier. And what Daisy's story tells us is that's not necessarily the case. She was a full-time moderator at Google. She had the gold-plated benefits. She had the good salary. She still wound up with PTSD. And in the piece, I contrast her story with a group of these low-paid immigrant moderators in Austin who are experiencing all of the same problems that Daisy was experiencing, but they're doing it for $18.50 an hour. So there's a real injustice there, I think.
The fact that, Casey, it's companies like Alphabet, Google, that are in focus, or Facebook with some of your earlier reporting this year, how much of it really should be falling on some of the companies that this type of work is being outsourced to as well?
I think absolutely Accenture, Cognizant, some of these other companies need to answer for the working conditions that they've created. But I think it's important to note that Alphabet, Facebook are very prescriptive in how these centers are set up. They're visiting them all the time. They are acutely aware of what the working conditions are, and they choose to allow them to persist.
Casey, you think Sue Wojcicki actually looks at this stuff every once in a while? Sometimes it helps for management to do what the workers do. Does she have an in-person, experience with every now and then having to moderate this stuff?
My understanding is that, yes, she has dipped into those queues, and the people at Google who work on what they call trust and safety, which is the division that includes content moderation, they tell me that they are shadowing these moderators, and I'm sure they're seeing very disturbing things. But, one of the things you learn when you talk to these moderators is it's typically not what you see on a single shift that winds up giving you PTSD. It's that repeated daily exposure for 3 months, 6 months, or in the case of the folks I wrote about today, 2 years of doing this work.
Casey, I was struck when Daisy said we're not machines, which reminded me of the hope that one day you can relegate this duty to machines. How would you characterize the evolution of that technology as we've gone through the year?
Well, so over the long term, I am optimistic that machine learning will be able to recognize more and more bad stuff and will remove some of that burden on these moderators. But we know that when it comes to content moderation, there are a lot of judgment calls you have to make, and machines are not going to be in a position to do that for a very long time. And what I fear is happening in the meantime is these companies are throwing up their hands and they're saying, don't worry, machine learning is going to fix it. And they're sort of letting that paper over the fact that right now, every day, tens of thousands of moderators are being subjected to imagery that is causing them PTSD. So I want to keep the focus there.
So, the people have to train the machines. That's how it works, right? That's where all of these alarms over people listening to Siri or Alexa queries comes from. So what's the fix then? Is there any best practice on this? Fewer hours at a time doing it, moving around to different queues? What's the answer to helping these workers psychologically?
I don't know that there's any one answer, although I do like both of those things that you just described. In my mind, it makes a lot more sense to be rotating these workers on and off queues instead of forcing them to review terrorism and nothing but terrorism for 2 years every single day, right? That seems like there's a problem. I also want them to conduct research. We know when it comes to certain chemicals, there is a maximum level of exposure before you and I start to experience health problems. We need to have a similar understanding for how this content affects our psychology. So I would love to see these companies invest in research to understand what this work that they're subjecting these workers to is doing to them over the long term. I think that would be a great starting point.
Yeah, those are some key potential solutions or at least moves in the right direction, Casey. I wonder if it's time. I feel like for so many years we've been hearing from so many of these tech companies that the internet is going to be a great place and it's going to create a more connected environment, it's going to open up the world, et cetera, et cetera, et cetera. And yet what we continuously see over and over again is that there is this dark side that not only will not go away, but seems to be mushrooming up at an even more alarming rate. And I wonder how that plays into these workforces at these companies and what it means for longer term, whether just how involved humans will have to continue to be.
Yeah, well, I think it's a great question, Morgan. And for me, what I believe is that the internet needs a police force, right? Like just like any other society needs a police force. But what's happened is that instead of treating these workers like the police officers they're treating them like they're doing the absolute most menial labor, right? They're not valuing it at all. I think that to improve the situation, we have to start by treating this work with great respect and by surrounding these folks with much more support than they've ever had, because my gosh, do they deserve it.
Yeah. Casey, great reporting. Thank you for joining us. We did reach out to Google for comment. We have not heard back yet, but you can go to The Verge to check out the full report. Thank you.
Thanks, Morgan.
Market continues to be very resilient today. Dow's up 182, record highs across the board, and just 5 points away from S&P 3200.
Hi, I'm very slow with new... Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 podcasts, season 6. Listen now to 30 for 30 podcasts on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Start hearing more of what you want.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations,
Live commercial-free news,
and every live NFL, MLB, NBA, and NHL game.
Visit tunein.com/premium to upgrade.
We use the music culturally. We love music, but business-wise, it just gets you in the door, and it gets you. It's almost like a coffee book. So like it gets you in the doors that you need to get to, because the kids love it. So their dads and their moms that own big companies. Oh, well, let me look more into this fat guy, Fat Joe, and then it becomes a conversation piece. And once they meet me, they're like, wow, we could do something with this guy. Let's get money, you know. So that's the only way to view music now. It's almost like a giant commercial to lead into other businesses.
Yeah, oftentimes the money isn't coming from the music itself. That's hip-hop artist and entrepreneur Fat Joe discussing the business around the music industry. We had a wide-ranging conversation at his Up NYC sneaker shop, touching on his new album with Dre, Family Ties, his money mistakes, and a lot more. For more video, go to cnbc.com/Fort-Knox, or even easier, fort.com, FORTT.com will redirect you there.
Another great interview, John. But he's 100% absolutely right in terms of what we've seen happen in the music industry. And just basically the fact that content creation, you're not necessarily making money off of it, since streaming is a fraction of what it used to be in terms of album sales. You're making money off of the touring, you're making money off the publishing, and you're making money off of your ability to market that and leverage that for other types of investments. So interesting to hear him talk about it, because he's been in this game, he's been in the music industry for so long.
Long time. Unless you're Taylor Swift or Beyonce. They make money off of everything.
But they're the exception to the rule.
Yeah. Yes, indeed.
Nice stuff. Meantime, market continues to respond here to the news over the weekend and sort of the clarity we got over trade policy. We'll be waiting to see, though, USMCA get a vote out of the House finally. And amid some new reports that maybe there were some things that slipped into the bill that the Mexicans still need to get approved. But
something to
for
watch.
the most part, a lot of clarity's come to the market in the past few days.
Also, just want to, going back to the music conversation for a minute, flag that the DOJ is preparing to take legal action against Live Nation Entertainment over allegations that the company sought to strong-arm concert venues into using its Ticketmaster subsidiary. That's according to a report in the Wall Street Journal. Civil action is expected to claim that Live Nation violated terms of its 2010 settlement with the government, allowing it to complete its merger with Ticketmaster. Agreement placed conditions on the company to ensure fair competition. For one, Live Nation was prohibited from retaliating against venue owners that decided to defect to competitors. Guys, I think this is going to be one to watch, not just in terms of Live Nation, but also given everything we're seeing play out with T-Mobile and Sprint, and just the fact that there does seem to be a critical eye on some of the mergers and deals that have been approved over the years and what it has ultimately meant for competition in those industries.
Some kind of unintended but perhaps foreseen consequences, right? I mean, we were just talking about this when it comes to Facebook, to Amazon, right? When you start to snap up these competitors or even ancillary products, you say, oh, well, we don't want you using it in this bad way. What's to stop them from doing it? And then once they do, what are the new rules as technology advances to protect the consumer? Will they exist at all? Don't know.
Yeah. Meantime, markets at record highs again as we finish out the last 2 weeks of the year in terms of trading. It's kind of amazing.
2 weeks from tomorrow, 10-year getting once again close to 1.9. Corporate spread's a big winner today as well. Let's get to the judge in the half.
Carl, thanks so much. I'm Scott Wapner, front and center this hour. Stocks rising as the final 2 weeks of trading are underway. Is your money now cleared for takeoff? It is 12 noon, and this is the halftime report.
The road to record highs. The stocks that should be on your buy list headed into year-end and beyond. Boeing getting clipped. Growing concerns about the production of 737 MAX jets. What's next for the stock? Financials hitting record highs, one of the best performers this year, and a bullish new call on Goldman and a number of other names. It's our call of the day. The investment committee is ready to go. Halftime report starts right now.
Welcome, good to have you with us on this Monday. Our investment committee at the table today. Joe Terranova, Josh Brown, John Najarian, and Bryn Talkington is the managing partner at Requisite Capital Management. Let's begin. Where else? The markets. All three of the major averages are higher. Dow would be even stronger if not for the Boeing drag. But with several major obstacles out of the way is a melt up now in the cards. That's how I look at this, Josh. Now, you go down the list and you say, all right, you got this trade tensions are eased for the moment. You've got the UK elections in the rear view. You have maybe the fear of missing out and performance chase over 2 weeks.
Yeah.
All's good in the market world.
Yeah, this is one of those interesting moments. They don't happen all the time, where it almost doesn't matter what you own. You could own value, you could own growth, be making money in either one. Small caps making a 52-week high. They're still below the old 18 highs, but they're on their way. Banks have just broken above the 07 highs. All the mega cap banks look incredible. Tech is up 48% year to date. And now you have Europe up 21% year to date, going almost vertical this morning. I put a chart up this morning from my friend John Krinsky at Baycrest. Europe is coming out of a 20-year base. has done absolutely nothing in 2 decades on price alone in the stock 600. Now you got those stocks working. So, people always say, well, be selective, or people say, let's take a little less risk this year. Volatility is down 40% on the year. If your big bet was vol, you got killed. If you bet on almost everything else, from bonds to stocks, you made a lot of money. And what you're seeing right now, Scott, is the end result of that. People who have trailed the market, people who have been cautious, they're looking for something that hasn't done anything yet. And the best evidence of that, even energy, on a relative strength basis, energy right now is pushing. I've been talking about Halliburton on the desk over the last few weeks. Pretty obvious breakout there. So when you have energy now making its move at the tail end of the year, you know exactly what's happening. It's catch up, and it's people looking for the thing they'll look less stupid for buying now on December, whatever it is, 15th.
Yeah, Bryn, you got all 3 of the majors hitting new highs today. Dow, S&P, NASDAQ. The notes are passed around. Bank of America, market prime for a melt-up in Q1. You get Brexit and trade. Those risks have receded. The Fed's out of the way. Is that how we should all view where we are?
Well, I think it's really important for investors to take a step back and view this time last year, in the fourth quarter, the S&P was down close to 20%, peak to trough. Everyone was worried about the Fed raising rates too much, and then fast forward 12 months, and to Josh's point, pretty much all markets are up double digits. Tech up, to Josh, 45%, the Dow and S&P up plus 25. And so I think it's really important to remember, as investors are thinking about 2020, is that time in, not timing the market, is really the key to enjoy good returns. And, people that read too much into this time last year just missed a wonderful year. In years like this, you got to earn these years. And so I think, the note that we're going into a good first quarter, I don't think that's much of a stretch. I just think if you continue to have this positive momentum, and if you look at all that the Fed is doing, the Fed stepped back into the market in September of this year in the repo market. The ECB is continuing to increase their balance sheet. As long as the Fed and the ECB are going to continue to be accommodative, I think the markets have room to run.
I'd be surprised. If this doesn't continue for the final 2 weeks.
It's going to continue.
There's just nothing in the way that you can see. Surely something could happen that you don't foresee, but all of the hurdles seemingly are out of the way.
I think what's going to be important is how are we positioned going into earnings in the middle of January. And to your point, I can't see that the markets will not be priced accordingly for further upside. I think it is about sentiment shifting. I think it is about momentum here over the last 3 months, and it's about what's not priced in. We talked on Friday, and I felt as though Brexit was potentially more of an investment opportunity than the U.S. and China coming to some form of a resolution on phase 1. It presented for you the optionality to look at Europe once again as investable. Specifically, you go to the United Kingdom. I gave you the EWU, that's the ETF surrounding the United Kingdom. Again, I'll offer that today. I think that's a place to go. Diageo, ticker symbol DEO, that's another place in Europe you want to go. So what's not priced in right now in the strong sentiment and momentum shift that we've seen in the last 3 months? It's been exposure to European equities and also the exposure to emerging market equities, which are beginning to get a little bit of a formula of sentiment lift.
Bank of America, Doc, calls what we have in front of us a front-loaded new year. Because of many of the things that we've just talked about, you're going to get a carryover into the early part of 2020 when there aren't many risks in front of you. The majority of the risks come at you as the year progresses.
You bet, as we get closer to the election.
And other issues that remain unsettled. That's fair?
True, very fair. What's absent right now, Friday was, of course, we saw a lot of buying, outright buying. Today we're seeing a lack of sellers. So we can, lift up through that, Scott, easier because there just aren't folks willing to say, yeah, let me pay my 20% or more on these gains that I've got right now. No, they're basically saying if you want them, you got to pay a lot more. Look at Apple, new all-time high, burst through that to the upside. PayPal, beautiful move to the upside. To Joe's point and Bryn's about energy, Southwest Energy, Neighbors, Range Resources, these are all up, I think, 10% today across the board. Some of that is the chase for performance, and some of it is because, when you're looking around, you're saying, boy, if crude can hang in between 55 and 65, these are going to perform for me next year. And I think a lot of people are getting a little early on that, Scott. I don't mean too early. I mean they're doing the Oklahoma Sooner. They're getting in there before the money from the IRAs and the 401ks and all that comes flying in, as it is expected to do virtually every year.
Apple is up 75% this year.
Apple's at 280. I'm looking at it as we speak.
Scott, you and I have been doing this
North
show
of
together since 2011. How many notes have we read? The easy money has already been made in Apple. This was the easiest money this year in particular. There was almost no volatility in the stock, handful of downgrades that maybe knocked it off 1%, 2%. This epitomizes what 2019 felt like. This name, this is the biggest stock on earth, had one of the biggest gains in the S&P.
You had your one moment to get in. You had that moment.
in
What,
January.
sub 150?
It was sub 149
it was sub
150
or whatever it was.
Listen, Amazon.
You had like 10 minutes.
Apple greeted 2019 in a very negative way. Let's not forget that when they announced that they were not going to be offering guidance anymore, and the stock fell precipitously. So I think you're correct. Apple is kind of indicative of 2019, but it's indicative in that way because of positioning. Think of how the positioning was coming off of Q4 in Apple. I think there was a swell of bearishness that was created around Apple going into January. And Apple fundamentally this year, what did it really do? Not very much.
Okay, so then is a move like this justified? Is tech more broadly too expensive?
I don't know if I agree that it hasn't done much fundamentally.
Maybe not. Maybe not enough to live
the
up
AirPods,
to 75%.
They're going to sell 200 million pairs of
I understand
AirPods.
that.
Hold on. At a 35% profit margin is A, number one. B, number two, the launch of the 11, which has been a success. And it's not a given that every time they launch a new phone, it's going to work. Some of them didn't. And then the ability to introduce lower cost models in emerging markets and other parts of the world that everyone said Apple's not going to sell a lower price phone. They won't be able to compete, whatever. Of course they did.
All of your points are very well taken, of course, but do those equal 75%?
Well, wait a second. Check the box on all of those. Did they have significant revenue growth like they've had in prior years? Did they have earnings growth like they didn't have prior years? That's generally what the market is modeling. So they had, like the market, multiple expansion. And that is a unique circumstance that we experienced this last year.
Is tech now too expensive? You look at the NASDAQ, I think we showed it was just up 34% year to date.
The ones you want to focus on,
Place everybody
that
loves.
we're looking at, Scott, we continue to like Apple and anybody exposed to 5G. Because that's another reason I think you have an absence of sellers here. Again, it's not just the chase for performance. It is that the sellers just aren't there. And yet everybody knows that this is going to be the biggest thing since Apple first introduced an iPhone when they introduced the 5G phones. And that won't just be Apple, by the way. I mean, if you want to trade Huawei and be over there, if you want to trade Samsung or any of these, some of those already have exposure.
You've got to be really selective, though, when it comes to tech, especially things like the chips.
The chips.
There are a couple of calls today. Micron, Western Dig, get upgrades, but the semiconductor SMH has had a fabulous year.
And I think that's where, to your point, is has tech run too far? I mean, just to close the loop on Apple, I think Apple went from a 16 PE to a 21. So yes, that's multiple expansion, but that's still very inexpensive. And so I think there's great names like Microsoft, Apple. Once again, if you get good positive sentiment continued, Apple's multiple could continue to expand because it's probably still under-owned because they're still doing stock buybacks and there's less shares out there. But I definitely think in the semiconductor space, a name, I don't own it, but I'm looking at it like a Qorvo. It's a great company, but it is getting more expensive, and I feel like you have to figure out what's built into 5G.
Qorvo's up 90%.
Top 5
Exactly.
S&P performer year to date.
Right?
Look at the technology S&P top performers. I believe the top 3: Lam Research, AMD, and Clack.
I mean, NXP is up 70, Skyworks is up 70, Qorvo, as Bryn was just saying, is up 92.
AMD's up 122. Lam Research is up 111. Clack is up 96. So technology and communication services, guess what? Right back in terms of weighting of the S&P to where we thought it was going to be, exactly a third of the entire S&P. So tell me in 2020 where that's going, and I'll tell you where the S&P is going.
Lost in the conversation about the Microsofts and the Apples, which are now obviously so important to the indices that we quote, this index is up this is up that. These are the stocks. Other stocks have had good moves too, but this is where the weights are. Lost in this conversation is even without multiple expansion and without a ton of revenue and earnings growth, Microsoft, Apple, these are two of the most profitable companies in history. They are wildly profitable 20 and 30 years after being founded, and they can continue to retire shares, shrink the float. So even if you don't get a lot of growth or a lot of multiple expansion, the stocks can still work their way higher just purely based on how much cash they're generating and how much they're returning to shareholders. And I think people underestimated the role of that sort of thing, specifically in the tech sector. If we were talking about tech dividends 10 years ago, when this bull market began, you would have laughed at me. Tech and dividend were not a thing outside of IBM. That has completely changed.
There are, even with the run, and we show the XLK with a gain of 46.5%, there's Bank of America today hunting for value in semis, and they're looking at Intel and Broadcom. Intel's up like 24% year to date, still called a value tech relative to what some of these other names have done.
Yeah, if you're going to go there, I think you go to Texas Instruments. I think that's where you would find the value opportunity. To Josh's comments on Apple and Microsoft, you could apply the same commentary to Amazon.
Indeed.
What has happened to Amazon in 2019? It is no different in terms of its profit model, in terms of its ability to have margins.
I asked this question to the desk the other day. If at the beginning of the year I would have told you NASDAQ's going to be up 33%, S&P is going to go 28 or thereabouts, and who knows, maybe more, and Amazon is going to be a laggard of the market, the manner in which it was.
Not returning capital to shareholders.
Right?
Not
Would
returning.
we have been surprised?
Yeah. Yep. And by the way, when we look back on this year, speaking of Amazon, this is the year that their competitors got their stuff together. When you think about some of the biggest performing names in the S&P being companies that are head-to-head with Amazon, 2 years ago we thought they were dead or they were in big trouble.
Right. Target,
Look,
Walmart,
Best Buy, Walmart. These stocks are up 50, 70, 90%. It's not that they're hurting Amazon. It's that there are alternatives for investors who want exposure to the consumer. That's a big development this year.
You've had an amazing year in the market, and Amazon's only up 17%.
I mean, you could make the case. I think that owning a Microsoft and a Walmart is going to be a better return than owning Amazon. It's like the Microsoft contract with Jedi is huge. It totally gives them...
So you get cloud and you get the retail. That's where you're going.
Right, exactly. And I would rather own those two together going forward, because I also think with Amazon, and I don't think it's priced in the stock, but it is a narrative out there, that they continue to copy products from folks, and I just think it puts pressure on the name, and I think that owning different names like a Target or a Walmart with something like a Microsoft gives you better optionality than just having this bundled solution inside of Amazon.
Scott, take a look at Synaptics, SYNA. This one, of course, had that big pop on Friday. I think what a lot of folks might not have focused on, yeah, they know it's a tech stock, and they're saying, well, maybe Broadcom or Avago, and some of the misses that were there, and perhaps some of the move by Apple away from some of those products might be good for a Synaptics. Sure could be. Take a look at the valuation. It's a $2.1 billion stock, I think, something like that. Last time I checked, Beats was $3 billion when Apple took them out. So when you see a stock moving like this, and there's a lot of these, and this is not one of those that's up 70% on the year. It's one of those that's up like, almost like Amazon. I think those are going to be stocks, especially those under $5 billion, that people are going to be looking at in 2020.
So let's continue on the stock plays, and then we'll finish this conversation with a note from a friend of ours, a friend of this show, that's going to have you talking. I'm sure of that. We'll tease that ahead, and we'll get to that. 11 stocks for 2020 from Bank of America today. Disney, CarMax, Tyson Foods, ExxonMobil, that goes to some of the energy plays we've heard about over here. Citigroup, Raytheon, Intel, Kimco, Dentsply, we've never talked about on this show, American Electric Power. What do you guys think of this list? Big plays into 2020. It's a stock from each sector.
Right.
So let's go sector hunting, stock hunting within sectors.
Quality plays. Obviously, I own Disney. What the characteristics I like about all of these names, number one, you can identify them as what I like to call quality momentum. That means when you look at their price, it is moving higher, and they also have fundamental metrics that you could define them as quality. But I also think what's important in 2020 is ascribing in within your portfolio and understanding that at some point you're going to have to deal with the unique circumstance of volatility. different than the environment that we had to deal with in 2019. You want to be in names like these names that you're able to endure and withstand that volatility. Some of the other names that we've mentioned before, some of those high-flying semi-names, I don't know if you're going to be able to endure that type of volatility when they have beta exposure that's pushing above 1.7.
These are not tactical trading names.
No.
These are core holdings for a minimum of the next year. And they think you're going to do well in these. I know there's belief in Disney on the desk because the ownership says so.
Yep.
What about ExxonMobil? Let's take ExxonMobil.
I mean, I'll say that. I mean, to me, Exxon is an obvious name to choose. We don't own it. We would rather play what we would call the toll booths or the pipelines, like a Kinder Morgan or a Targa or a Viper Energy, which actually they take a cut off the top line and they own acreage mostly in the Permian, and they've got really nice dividends, and they're going to, like a Viper Energy isn't going to be as susceptible to the price of oil because they're taking it off the top line, and those pipelines are continuing to get built out. So we would rather own these smaller names than just like an Exxon or a BP. We think that gives us more optionality upside and also gives you a better dividend.
Josh, take this list on, not including Disney, because I know where the view is on Disney, but you can take Citi or any of these other names that
I would say, by the way, thinking back on this year, Disney is one of the few ideas that the desk universally loved early in the year, got involved with. I think we, as a show, did a really good job on that name. You can't say that for every name, but I think we covered that to death. I think Tyson's really interesting. This is a stock that broke out in 2016 and just kept on going. It's said to be historically a commodity producer. Obviously, poultry is one of their biggest lines of business, but they're feeding the world. And this is 13 times forward earnings, which maybe is not cheap historically for Tyson, but is definitely cheap relative to the overall S&P, which is selling for a forward earnings multiple of around 19.4. So it's definitely a lower valued name, but it's got a chart that looks incredible. It's definitely piqued my interest. I have no position currently, but I definitely want to take a look and see what's going on here.
What about Citi? What about Citigroup? As the one financial... Let me go Doc first.
Okay. I would say that it's a great list, but I'll take U.S. Bank over Citi every day of the week, and I'll take Chevron over ExxonMobil every day of the week. So I think these are nice picks, Scott.
And why so?
I really like, we've had unusual activity in both U.S. Bancorp and in Chevron. That's one of the big drivers. The other is that I just think ExxonMobil is not as attractive to me, and these guys just have done this deal with Oxy, and I think that this is going to be a big deal for Chevron. They've already taken that 10 or 11 billion write-off, and the stock was still up a couple bucks the day after they did that last week. So I like this one a lot if I'm in the energy space. I like Bryn's picks a lot more, but if you want me to be on things that are on this list, those are the two that I would...
We can vet this list. I mean, what about Raytheon? Wish Farmer Jim was here to kick around that. But
if Raytheon, so-so on that one. Westrock is a name that I would look at, especially if we're going to see a little bit of a global recovery. It's underperformed the last 3 years, certainly. But if there's going to be a little bit more of the rest of the world healing there, that's the place you want to go. I also, just going back to Citi for a second, again, this is where is the rest of the world going to begin to recover is important in 2020. If that's the case, I have been in JP Morgan. Why? I want the U.S.-oriented exposure.
Citi more international.
Citi is 80% international exposure, 20% in the U.S. JP Morgan is 76% in the United States. So tell me in 2020 which is going to begin to perform better. And I think that's really important in the conversation moving forward. So better outside the U.S., Westrock's going to work, and Citi might actually outperform JP Morgan.
Let's kick around a name not on this list, but a name in the news, and then we're going to get to the note that I'm talking about to finish this.
Okay.
Bring it full circle. Boeing. What do we do with Boeing on the news today of the Wall Street Journal reporting they're weighing, halting, or cutting production of the MAX?
Well, we had owned it earlier this year, and I had talked about it. We had owned it and then sold calls against it, and we bought it earlier in the summer. And then when Gary Kelly came out and said, we don't
considering
know,
their options,
yes,
or taking a look around.
And Gary Kelly said, we thought this was going to be 9 weeks, not 9 months. And that was months ago when he said that. We actually exited the position around 350 because it just felt there were more known unknowns, right? We know the issue. We don't know when it's going to get fixed. And so we moved the position. And I do think that there's still that unknown as we don't know when it's going to come back online. Listen, this is a duopoly. Carrier, you can't switch to go to Airbus, right? It's not that simple to do that. Boeing will come back online, and long term, there will be a proper entry point, but whether that's at 329 or 300, I think that's where the market's trying to rationalize right now. So we would still be stepping back from it and wouldn't be entering at this point.
What about the rest of the desk at 329?
You don't have to have a view on this name is where I've been all year with this, and fortunately I haven't wasted any time with it. I would say, though, that this is probably the single most predicate reason for why the Dow has not hit 30,000 yet. This is a big share price. The Dow is price weighted. This thing's got it punches above its weight class where it should in the Dow. I think that's why we're not wearing those hats. This stock's just been awful.
Yeah, I mean, as we said at the very, very top, you'd have a much stronger
440 a year ago,
much stronger day in the Dow if Boeing wasn't doing what it's doing today.
I tried it a month ago, but a lot of the decision to get in was on technicals, and oddly enough, technicals are going to guide you here on Boeing. You had the break above the 200-day moving average. I talked about that on the air. I felt as though that was a reason to get in. It failed. I got out of the position quickly based on technicals. I think that's actually saved me. So technicals have worked here. The thing that's discouraging on a fundamental basis this morning is hearing the potential about the dividend. That's a challenge. Now, does that actually happen where the dividend gets suspended? I don't know. I think they need about $4 billion to fund it, and they have that. But do they go ahead and suspend the dividend? That would be incredibly problematic.
So let's do this. In the 2 or 2.5 minutes we have left in the block, we started broad, we went lower, we talked about individual stocks. Let's bring it all the way around. And I want to hit this note from Morgan Stanley's Mike Wilson. Yep. Okay? The guy who called it right and then I think was slow to realize that there were other forces at work that were going to drive stocks higher and probably missed a good bit of that, despite some of the nuance in the targets of bull case, bear case, best case, whatever. Today, it's a trifecta of positive catalysts. Positive trifecta and liquidity keep us bullish through the year end. Those being what we talked about: dovish, Fed, U.S.-China trade deal, potential path to an orderly Brexit, pushing risk assets higher. That's for the next couple of weeks. They also talk about a setup for portfolio recommendations. Overweight the rest of the world, okay? World equities, mainly Japan and Europe versus the U.S. Within the U.S., they're overweight value versus growth, but with a barbell of both cyclicals and defensives. Who wants that first?
I'll start. I mean, so I think that it was a good piece. I do think from a weighting standpoint, it's interesting. I know, international has been really inexpensive and it's been cheaper than the U.S., but it's been cheaper for a reason. We actually don't own international in the portfolio. We moved out of it in summer of 18 and moved into U.S. value because we felt that U.S. value was a better way for us to play value than international. And I still am not sure I see where we're going to get earnings growth out of Europe. Germany is apparently going to do another round of auto layoffs in the first quarter. And so we would want to wait till we actually see some positive catalysts besides the dollar or just momentum before we would move back into international.
I know you have thoughts on this. Is this the moment to do what Mike Wilson says and overweight the rest of the world versus the U.S. because of the lagging performance?
So we've been doing that, and I don't know if this is the absolute best moment. If you're a trader, it might be. So I'm speaking usually on the show from an investor standpoint. We believe in diversification. We own international stocks. We don't waver with which way the wind blows. The idea is that at the moment that they are the most hated and there's the least reason to own them, they will probably be selling for the lowest multiple and therefore have the most potential upside if things turn out to not be as bad as everyone believed. Europe's up 21% this year. Europe has done absolutely nothing in a couple of years. It's been very frustrating. Every time it seems to want to break out above the 2000 high, the 2007 high, as you could see in this chart. But it's breaking through right now. And it'll take a couple of weeks before you could say this is a true breakout. But if you're not in these names and you think it's going to be U.S. ahead of the rest of the world every year forever, history says otherwise, and I think that'll be the case here.
Okay. Good stuff. We covered a lot of ground.
Sure.
We'll take a quick break. Lots more coming up. Here's what else is on the Halftime Report.
financials among the top performing sectors of the year, and a bullish new call on a number of big banks. The investment committee is ready to debate it in our call of the day. Plus, Barron's is out with its 10 stock picks for 2020. We'll see if our desk agrees with their game plan straight ahead. The halftime report with Scott Wapner and the Traders is back in 2 minutes.
I don't like the idea of my...
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today. Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Welcome back. Financials hitting new highs today, and Citi is out with its top bank picks, including an upgrade for Goldman Sachs. To buy, the price target there, $255. Bryn, you own that. They make calls on several banks today, which we're going to go through. We talked about Citi on the other note, but this is Goldman upgraded to a buy today at Citi.
I think Goldman's been a really interesting, it's been a great performer this year, but we've talked about it on the desk this year. You know, it was below book value for multiple times this year. When the stock goes under 200, it's below book value, and it had been trading between really like 195 to 220. And a few months ago, it broke out. Or a few weeks ago, it broke out. I think David Solomon's the right person at the right time. What they're doing with Marcus, they've consolidated also their private equity groups. They had 3 distinct private equity groups, consolidating that. And you think about, you know, the management fee, the incentives, they're now going to be the number 3, I want to say, private equity firm behind Blackstone and KKR. And so they think they have multiple levers, which makes it an interesting kind of different bank than the typical, let's say the other bigger banks like a JP Morgan. And so we own it, and we're gonna stick with it.
They say, Joe, they're playing for singles, and they're talking about banks and cards. I know the card stock you like, okay? On the list of what we're talking about today, just so everybody is aware of everything that we're going to hit, Citizens Financial Group is upgraded to neutral, but it was on a sell. The target there is 41. Northern Trust goes to neutral from sell, 110. The target. Regions Financial was also on sell. They were negative on a lot of these. Regions gets upgraded to neutral, $17, and then USB, US Bancorp, upgraded to neutral from sell. The target, 62.
Yeah, I'm very surprised that there were sell ratings on USB, on Northern Trust, and on Regions. Those are 3 strong franchises that actually have endured over the last couple of years while we've seen the flattening of the yield curve. I think what's important looking forward here is understand that on a comp basis, trading revenue is going to look very strong in the coming quarter. I think that's a reasonable expectation. I think it's going to price in well for a name like Northern Trust. I think it's going to price in well for a lot of the big banks. And I think it also brings you to Goldman Sachs and Morgan Stanley themselves. I would expect the trading revenue looks good there.
All of these stocks that I mentioned have had a fabulous year. Goldman's up 37%, and they're, as we said, they're new highs. So they're back at their 52-week high levels. Citizens up 36, Northern 31, Regions 30, USB 33.
Let's look at Goldman, though. This is a negative 3-year return. That is extraordinary in this market. This stock is down 1% over 3 years. Why?
Growth.
Well, look, it's now not getting a growth multiple whatsoever. Nobody thinks it'll grow. It's 9.8 times the next 12 months earnings estimates. So even if you think those estimates are good, the company's basically getting no credit for what I consider to be a historic transformation. They're hiring technologists. The average age of their employee has come down substantially. They're going into businesses that people said in a million years they would never imagine Goldman offering a credit card to people that, quite frankly, don't have the best credit rating. Goldman offering banking services to people who really don't have a lot of money and may never become investment banking clients. They are looking at all of these areas that the white shoe investment banks historically have completely ignored. And so if you're buying the stock here, you're making the bet that at some point, they're going to pull off this transformation and compete head-to-head with consumer financial services giants like Schwab, and they're really going to do it well. And B, that Wall Street will at some point give them credit for it. I think it's a good bet. I would be a buyer here. I do not think that you're taking a lot of risk at under 10 times forward earnings of them being able to get Wall Street to pay attention to that. It's an $80 billion market cap. This is one of the greatest companies in the history of America. And it's a company that is now positioned for the next 20 years, whereas 3 years ago, they were still positioned for the last 20 years. So I like the story. I like the valuation. I like the technicals. And I would be long here. I don't know why I don't own it.
The reason that I think Morgan Stanley's a better bet than Goldman, I think they check a lot of the same boxes that Josh was talking about. I think Goldman will likely make a move because of what Schwab and TD Ameritrade have done, Judge. That move might be accelerated for them to get into the exact space that Josh accurately is addressing there, that Goldman wants into.
The difference is, though, that Goldman bought United Capital for $700-something million.
Right.
And when they did that, they bought Joe Duran, and they bought probably the most successful registered investment advisory platform ever created. Mm-hmm. And Morgan has not done that yet. Do they buy a big RIA? Maybe.
Yeah, but they have all the wealth management and all of the order flow. Goldman does not have that yet.
They just bought it.
Well,
I just finished saying that they bought it.
$700 million versus what Morgan Stanley already has
they paid,
with the 30,000.
Let me stop you. They paid $700 million.
Mm-hmm. I know,
they bought tens of billions of dollars in assets.
Right.
But the point is, Morgan Stanley already gets credit for being heavy into high net worth.
They're where Goldman wants to be.
Right. But so that's the point. If you think Goldman's going to succeed at this, I'm saying that's where the upside is, whereas Morgan Stanley has more to lose from Goldman being able to do that.
I don't know about that.
Well, I mean,
we'll agree. Nobody does. Yeah. I don't either.
Right. I do think, though, it's really interesting because, those models are really diverging. So before I would have thought, like 5, 10 years ago, I could have said Morgan Stanley and Goldman are somewhat competitors to each other, but their models are totally diverging. And so I think, we own Goldman. It's not that we don't like Morgan Stanley. It'll be interesting to see the next few years which type of model works.
Josh is to me pointing out that Goldman is investing in that particular area, and if they're likely to take market share from anybody in that particular space,
it's Morgan
Stanley is the one that you put high on that list. Why not Schwab?
Why wouldn't I say Schwab in that space?
Well,
Schwab, look at the...
They're definitely going... They're 100%, that's true. 100%, that's true. Historically, though...
And they're much bigger.
$1 million household in the United States, historically, has not been able to call up 1-800 Goldman Sachs and have an account opened on their behalf for wealth management. Just couldn't do it.
True.
Could do it at Morgan. So what Scott's picking out of what I'm saying is, like, if Morgan nails this thing, with the United Capital acquisition and other things that were Goldman. It's a formidable competitor in the $1 to $10 million household business, which quite frankly is the bulk of the wealth management business. There are 9 million households with between $1 and $5 million. That is a lot of potential business, and I do think it's primarily Merrill's and Morgan's to lose to Goldman.
I disagree. I think the business to lose is TD and Schwab, because that integration is going to take several years, and there'll be a lot of frustration during the time of that integration. Yeah. Those are big wealth managers there, too.
That's on the custody side, though. It's on the custody side. I'm saying,
and like execution. I mean, they
but head-to-head wealth management. That's if you're at a wirehouse right now.
I'll make this the last.
Yeah, if you're at a wirehouse right now, you've been losing some of your top talent to RIAs. Now all of a sudden, wait. Goldman Sachs is going to be talking to $2 and $3 million households. We had that wrapped up. We had that business all to ourselves. So that's why I think Goldman has more potential going forward. But we'll see.
All right. We will leave it there. Sue Herrera has the headlines for us.
I do indeed, Scott. Thanks so much. Here's what's happening at this hour, everyone. Defense Secretary Mark Esper is touring the woods of Bastogne, which is a key location in the Battle of the Bulge during World War II. He is in Belgium attending commemorations for the 75th anniversary of one of the war's bloodiest battles that sealed the defeat of Nazi Germany. Hong Kong's chief executive Carrie Lam says she briefed Chinese leaders on what has taken place in her city in the past 12 months. Speaking to reporters afterwards, she said she feels heartened by their support. Crowded and unpredictable trains and traffic jams stretching hundreds of miles have created big headaches for Parisians commuting to work this morning. This as France entered its 12th day of strikes against pension reforms. Only a handful of trains were actually in service. And Uber plans to double down in its investment into electric bikes and scooters. It has bought Jump, a bike-sharing service based in the U.S. last year, and it has since rolled out the company's two-wheelers internationally, mostly in European cities. The Parisians could use some of that right now to get in and out of that traffic. That's the news update this hour. Scotty, back to you.
Yes, they could. Sue, thanks. That's Sue Herrera. All right, up next, a look at which ETFs had the biggest impact on the market this year, what we could expect in the year ahead. First, we give your sector check, though, for the S&P on what is a pretty good day for stocks, to say the least. S&P's up 28, led by healthcare, energy, and tech. Halftime's back after this.
Each day.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Tonight, TuneIn has your Monday night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith at the touch. Smith double tackle into the end zone. Traquan Smith!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
To the
it.
sideline, the Van Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
And welcome back to the Halftime Report. I'm Bob Pisani. Time now for ETF Edge. As we approach the end of the decade, it's worth asking, what ETF had the biggest impact on the market in the last 10 years? That doesn't necessarily mean the biggest gainer, but the one that surprised everyone with its popularity or had the biggest overall impact on the market. Let's get the vote from Todd Rosenbluth, Senior Director of ETF and Mutual Fund Research at CFRA. Kim Arthur is the founding partner and CEO at Main Management. And Todd, you surprised me a little bit. You think an international ETF had the biggest impact on American ETF investing?
Yeah, so U.S. investors tend to be very U.S.-centric, but IEFA, which is an iShares Core MSCI EFA product, gives you exposure to the Europe, to Japan, developed countries around the world for 7 basis points. It's now a $70 billion ETF. It's taken share from other products from iShares and Vanguard. It's really helped asset allocation approaches with an ETF wrapper.
It's not just lower costs, you're arguing. Americans have invested overseas more and more in the last decade, and this particular ETF has been a big beneficiary of that.
That's the case. So investors, there's a lot of great companies, Nestle, Toyota. These are all companies that U.S. investors are quite familiar with. You can now get that in a low-cost ETF wrapper.
And Kim, you have a nod to our old friend Jack Bogle at Vanguard.
I sure do. VTI, so it's the total U.S. market exposure. It's got slightly lower median market cap than the S&P, so you're getting a size component to it. And if you look over the last decade here, you've been able to get this for 3 basis points. So investors have been able to beat the S&P 500 for 3 basis points, and I'm a firm believer that Jack Bogle did more to democratize for the average investor with exposure to indexes like this.
No disagreement on that at all, particularly regarding Bogle here. Let's just talk a little bit about surprises we might see in 2020. The standout ETF you think in 2020, Todd?
So we at CFRA like QUAL. This happens to be another iShares product. It's a quality ETF, tied to an MSCI index. Blue chip companies that have strong balance sheets, strong earnings trends. We think we're going to see moderate earnings growth, a strong and healthy economy, and blue chip companies can get exposed.
And relatively low volatility in this as well, in quality as well.
Yeah, so these are companies that have strong return on assets, return on equity, a lower volatility, but with a growth angle to it.
Just got less than 10 seconds. You're going for microcap.
I'm going for microcap. This is IWC, iShares product. It trades at the same valuation as emerging markets that people seem to love. 13 times, 1.6 times book, 1.4% yield. And when you have a move up in the PMIs above 50, people love microcap.
Surprising choice, but a good one, interesting one. Thanks very much, guys. Todd and Kim, thanks for joining me. More ETF Edge. Don't go away. Our live online show starts at 1 p.m. Eastern Time sharp. ETFedge.cnbc.com. We'll continue our 2020 look ahead and talk China with Perth Toll, the founder of Life and Liberty Indexes. Scott, back to you.
All right, Bobby, we appreciate it. All right, Barron's is out with its 10 stock picks for 2020. We are going to go around the desk, reveal the names. We'll do it next. Plus, we're ready to answer your questions on Pinterest, Weight Watchers, Store Capital, and more in 30 seconds.
ETF Edge is sponsored by Invesco.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
All right, welcome back. It's time to answer some of your questions now. First up, Joe, Vivian in New York, Dunkin' Brands. Dunkin' Brands, your thoughts and if they should spin off one of my all-time favorites, Baskin Robbins.
Really, Baskin Robbins.
Absolutely.
What's your favorite flavor?
Jamocha almond fudge and mint chocolate chip. You got a problem with that?
No. I like something with peanut butter.
Okay.
Who would buy that IPO if you just spun off?
I mean,
no offense, not good ice cream.
What?
I know it's part of your childhood. It's not objectively good. It's bad. So it's cheap sugar.
We got this guy's mic immediately, please.
I'm just saying.
All right,
I get it.
You're so enamored with Fudgy the Whale, you can't.
I go to Carvel. It's not that great either.
Of course.
It's not that great either.
Baskin Robbins is better.
Would you like it if Shake Shack had ice cream?
Is anyone buying a standalone ice cream?
They have shakes.
So, no, but that's exactly. So
what's your favorite flavor?
Josh and I, anything with peanut butter.
Favorite flavor is arugula. Come on.
Go ahead.
Anything with peanut butter. But anyway, Dunkin' needs to focus on beverages, cold beverages, and Dunkin' needs to focus on breakfast.
I agree with both those.
They have to focus on breakfast. It's coming. Everyone has breakfast. That's why Wendy's has the momentum right now.
What do you mean? Dunkin' has breakfast?
Breakfast. They have Beyond, but they don't have breakfast in the sense of what McDonald's has.
Like, sit down.
Yeah, Dunkin' needs to focus on breakfast. I'm going to repeat myself. Breakfast and cold beverages.
No, I'm going to repeat myself too.
They have breakfast. Stock. Don't focus on baskets.
You're saying they have to make it better?
They have to make the experience better. That's where the competition is going. The competition, Starbucks has nitro. What does Dunkin' have? Okay, they have espresso, but they need some cold beverages. Okay? Dunkin' needs to drive traffic in the afternoon. I know the stock.
A coffee colada.
Please, can you educate this man?
No, he's on the same page with me. I know he
goes
is.
to Dunkin' all the time.
Well, they did. They sell a ton of breakfast, but it's not great.
It's not. They need to. It's my point. They have to focus on it in the afternoon. You're going into Dunkin' in the afternoon for what?
I just regularly stop by and see what's going on.
Most of the time,
channel checks.
You're not. They need to drive the traffic in the afternoon. Now, back to Baskins. Who is buying Baskins Robbins? Who's going to buy Baskin Robbins? Who? You?
You know what's dope that they do though? The baseball helmet with the Sunday in it. They do it during baseball season. I think that's pretty good.
Love for them to spend it off.
It's not, it's not that good.
All right, Mister Store Capital.
Yeah.
From Dan in Connecticut. Buy on the dip. It's down 8% over a month.
Did you ever talk about that one?
Right, but it's like up 50% over 6 months.
Right. So do you buy? You buy more?
Yeah. No. Listen, I buy every time. Okay. Every time it pays distribution, I automatically add to it through the magic of my brokerage account. I don't even think about it. So dividend reinvestment on REITs, do it in a tax-free account, use an IRA or a SEP IRA or whatever you can do. That way, you're not getting hit with that distribution, which is at ordinary income for investors. So yeah, that's how I own REITs. That's how I own Store. I hope it comes down even further. My next distribution, I'll buy even more of it.
Okay, thank you. Bryn from Marva in Maine. Pinterest, is it a buy here?
So I own it. I would wait until next quarter. They have fantastic international growth. Ben Silverman's a great CEO. That being said, they haven't done a good job managing Wall Street expectations. And so it's a new company, publicly traded. So I'd wait a couple quarters until they find their footing.
Okay. Doc from Neil in Michigan. Do you think Weight Watchers is a stock worth holding on to?
Oprah Winfrey thinks so. She's going to be given 4.3% of the company, I guess, for extending her brand to that, and that's worth a fortune. Obviously, millions of shares. I would hold on to this one.
Okay. Thanks for the question. Straight ahead, 10 stock picks for 2020. Barron's has their new list. We've got it. We'll debate them in 2 minutes. But first, Andrew Ross Sorkin has a look at what's coming up on the exchange. ARS.
Good to see you, my friend. It is not in the books yet, and certain issues seem to be getting lost in translation. At least that's what they're saying. So what is the deal with the U.S.-China trade deal? We'll give you the latest. Plus, forget about breaking up big tech. One of our guests says just regulate them like utilities. He's going to make that case right here on the exchange. And how the NFL is tackling injuries with technology. The NFL's top health and safety guy, he's going to join us live. You got to see it. That and so much more on the exchange. The Halftime Report back after this.
It's a challenging time right now as an investor.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hey, tune-in listeners, Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Welcome back. Barron's is out with its 10 stocks for 2020. Names including Berkshire Hathaway, Alphabet, United Technology, Pfizer, Anthem, and more. You see the list in front of you, our parent Comcast. And Andrew Barry is the associate editor at Barron's. He's here to break it all down. Welcome. It's nice to have you on.
I'm glad to be here.
How'd you come up with the list?
Well, we've written about a number of these companies before, and we talked to a lot of investors and analysts and tried to come up with some ideas which we think can beat the market. It's not easy given how high-priced things are right now, but I think many of these stocks are undervalued right now.
You say there's a tilt towards value on the list, so you are among the believers that the value runway has some length to it.
I think so, and I think companies like Berkshire Hathaway or Viacom CBS or even Alphabet, which is kind of a growth at a reasonable price company, look pretty good right now.
Average dividend yield, 1.8%. Everything has to pay a dividend to make this list?
No, because a couple stocks like Alphabet don't pay dividends, so it doesn't have to be. Berkshire Hathaway doesn't pay a dividend either.
What do we think of the list, Josh?
Are you starting with the screen and then doing qualitative conversations about these names? Like if you're an investor watching at home wondering if they should get involved in the names on the list, where is the starting point?
Well, we do screens. We also talk to a lot of investors and analysts and try to come up with some ideas which are timely and topical and we think are pretty attractive and offer a pretty good risk reward.
Which is the one that you say if somebody wants the most potential upside, which is the one they should go for?
I think Viacom CBS could have a lot of upside right now. It's out of favor right now. It's a very low valuation. It's 6 times forward earnings right now.
Nobody wants it.
Nobody wants it right now. It's got a tenth the market cap of Disney right now. So, and I think ultimately it might be even acquired.
That's what I mean. You have a provocative thought in that vein. You think that Apple could acquire Viacom CBS?
I mean, I don't think anytime soon, but I think ultimately, it could. I think it has its new streaming service, and I wonder how much traction Apple's going to be able to get with it against Disney and Netflix. And I think it's a great content factory at Viacom CBS, and it's pretty attractively priced. And Apple's $1.2 trillion market cap, and Viacom CBS is just $25 billion.
Joe?
So do you think that initiates a lot of M&A in the traditional media space?
I don't think so. I think there are not many media companies left to be bought, but I think, Viacom CBS is one of the last ones out there that I think is attractive enough that could be bought. I think it's controlled, by the Shari Redstone and the Redstone family. I don't think they want to sell it anytime soon, but I think ultimately in the next year or two, they may realize that they need scale and that they'll take a bid from a larger company.
United Technologies got lambasted by, your words, not mine, by the activists that weren't thrilled with the Raytheon deal, but you have it on your list, and the stock looks great technically. What would you say about UTX?
Well, I think that Wall Street's coming around to the deal. They initially hated it, but I think now, people are saying that the deal looks pretty good. It creates a combined and attractive defense and aerospace company, and plus you'll be getting the Carrier and Otis spinoffs next year. So you have 3 pieces of paper in a year, and I think all 3 of them are going to be leaders in their field and look pretty good.
Andrew, we appreciate you coming in. Thanks so much. Andrew Barry again with Barron's. All right, your final trades when halftime returns in just 2 minutes.
You know it's out there somewhere, but you just keep missing out. I'm talking about your dream job. Now it's easier to find and land your next role with the LinkedIn app. Build connections, keep in touch, and be the first to hear about new jobs. LinkedIn has more openings than applicants. And sometimes all it takes is one LinkedIn connection to land the job that's right for you. Don't miss out. Get your next big break and find the job meant for you. Download the free LinkedIn app today.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Make my job easier this year with a subscription to TuneIn Premium, featuring the world's largest selection of music, news, podcasts, and sports. It's a gift they'll enjoy every day, all year long. Happy holidays! Search Premium to upgrade today.
Next time on the New Yorker Radio Hour, Greta Gerwig on bringing Louisa May Alcott's novel Little Women to the big screen.
Women have all kinds of practice imagining themselves as men, and men have very little practice imagining themselves as women.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
All right, Doc, it's your moment. All right. Options bulls are spotting unusual activity in
Micron. These are December 27th expiration, folks.
This is Nike in front of us here.
Oh, okay, sorry.
They switched it.
All right.
Same thing.
It's the same thing, yeah. Micron has unusual activity, December 27th expiration. It's about a $2 and some odd cent play, 53 calls, bought those. I'll probably be in them all the way towards the end of next week.
Talked about that positive up call today, the upgrade.
Yes, sir. Nike, NKE, the second one, also December 27th expiry. So neither of them are this week. I bought this one as well, and I'll be in it about a week.
30 seconds for final trades. Joey?
Best Buy reported at the end of November. The momentum continues to move higher.
Josh Brown?
Stay long, Goldman. I might join you.
Okay. Bryn?
Microsoft, cloud, gaming, lots of optionality on the upside next year.
50% year to date.
Third play for December 27th expiration, Scott, Twitter. TWTR, I bought it during the show. Options upside at the 31 strike.
I have to say, questionable fashion decisions from you lately with the saddlebag. Liking this, though.
Oh, okay, you like the...
Very nice.
Thank you.
All right, the
Velvet's
exchange
popular.
begins right now. Andrew.
Thank you, Scott. Welcome, everybody. I'm Andrew Ross Sorkin, and here's what we've got ahead today. Despite the lack of clarity on the Phase 1 trade deal, investors are cheering as stocks hit new highs. The question, of course, will the euphoria last? We're going to debate that and so much more. Plus, breaking up, yep, it is hard to do. We're going to look at why splitting up big tech companies may not be the best answer to solving anti-competitive issues. And a look at the medical bill and debt crisis in America. But we begin right now, today, with the markets, and Seema Modi's got those numbers. Seema.
Good afternoon, Andrew. Record highs here in the U.S. In fact, record highs in Europe as well. The MSCI World Index notching a new high as well, which looks at a lot of the emerging markets across the world. So sectors really moving on this Phase 1 deal. The chip makers, led by Western Digital and Micron Tech, both of these stocks getting an upgrade from Susquehanna. You can see Advanced Micro Devices up about 3.5%. So overall, a positive reaction to the latest developments on the U.S.-China trade front. We also want to draw your attention to shares of Uber getting a lift today. It's up around 5% on a report that it may be in talks to sell its Uber Eats business in India to a local player. And it's actually a strategy that Uber has used in the past to raise cash, selling its Chinese ride-hailing business to China's Didi. It's also its South Asian business to Grab. You can take a look at the stock, again, up 5%, but still down about 33% from its $45 IPO price. Andrew, sending it back to you.
Seema, thank you for that. We begin this afternoon with the very latest on the U.S.-China Phase 1 trade agreement, which isn't in the books just yet. And, yep, there may be some issues that seem to be getting lost in translation. To get some of that translation right now, we're headed to Washington, where Kayla Tausche has the very latest this afternoon. Kayla, help translate for us.
Well, I can try. I mean, the negotiators are hard at work behind closed doors trying to figure out exactly what it would look like in both English and Chinese. Both countries rolling out the deal. It does indicate that they've agreed to the terms, at least behind the scenes. But the U.S. and China were selective in what they decided to disclose last week. First, on agricultural purchases, the U.S. said it would be up to $50 billion in additional purchases by China. But China said it would depend on the market. And then on tariffs, China said Washington agreed to a scheduled rollback, but the top U.S. trade negotiator, Bob Lighthizer, said on Friday that's not the case. Lighthizer did acknowledge there may be some challenges holding China to account.
We're going to sign this agreement, but I'll tell you this, the second phase 2 is going to be determined also by how we implement phase 1. Phase 1 is going to be implemented right down to every detail. It really is a remarkable agreement, but it's not going to solve all the problems.
And perhaps some of the details and the different messaging is an indicator of the domestic political considerations that each country had and still have to make. Andrew?
Hey, Kayla, help me, though, with this. Do we think it's really lost in translation, Bill Murray, Scarlett Johansson style, or do we think they actually understand what's going on and they just don't want to understand, if you will?
It really depends, Andrew, especially on the tariff rollback portion of this. I mean, there could be a situation where the U.S. is just holding out on announcing that because they want to make sure they get to a signing. They want to make sure that they get to some of those enforcement mile markers before they actually announce that they've decided to do that. I know that officials are frustrated by the way the market tends to move on every single piece of news that comes out of this. And perhaps if they said that they were going to roll back all of these tariffs and then China didn't deliver, there's a worry that in an election year, the market could get ahead of itself and sell off on that.
I think Scarlett Johansson would have gotten this. She was great on SNL this weekend. But let me ask you separately, the USMCA trade deal is also facing some new hurdles, and we want to understand the latest there as well.
Andrew, last week, the deal that was announced between the White House and House Democrats had one provision that had previously been a deal breaker for Mexico, and that is the ability of the U.S. to have on-the-ground inspectors, actually making sure that Mexico is delivering on its labor reforms. Today, Mexico's top negotiator is back in Washington trying to figure out how this didn't end up on the cutting room floor, how it ended up in the deal. We are expecting comments later this afternoon on what that means for the deal going forward and whether Mexico has just had to accept this provision in the deal.
Okay. Thank you for that, Kayla. I imagine we're going to be talking to you a lot more today and throughout the rest of this week as this gets hammered out or figured out or translated. Meantime, despite all this uncertainty about what's actually in the trade deal, markets continue to hit all-time highs. Will the market demand more clarity at some point, or is this enough for the rally to keep going? That's the question of the hour. I'm going to bring in Papasani and Darryl Cronk, Chief Investment Officer and Wealth Investment Management at Wells Fargo, for the answer. Mr. Pasani, you're on the floor. You're seeing it in action. Do we need to actually translate this, or is this deal unto itself translating itself?
Right. You know, the cynics that are out there, and there's many of them, are saying, wait a minute, this is not a trade deal. It's a hiatus. We all know that this battle is going to continue into 2020, and there's a high likelihood that we could bring back more tariffs. That's true, but things are different. It's hard not to say clarity's a little better than it was a week or two ago. Look what we've had. We've got the Fed out basically neutral overall and clearly willing to step in. Brexit was a huge defeat for Labour. That is a positive for stocks, whether you think Brexit is good or bad. Let's call it a trade deal truce for the moment here. And global growth, we're still not clear on how much of a bottom we're at, but there's some kind of bottom being put in. When you put it all together, it's hard to argue at this point that there's less visibility than before. And Andrew, if that doesn't convince you, just look at the VIX today. It's at 11. That's telling you the markets are very, very comfortable with that. Look at the historic highs and new highs that we've got in the markets right now.
Okay, so Daryl Cronk, you heard what Bob said. If you had to buy something right now in this, I'm not going to call it inflated market because I was just told it's fabulous. What would you do?
Well, Bob's exactly right. In a lot of ways, I think the Fed probably being on this hiatus is more important even than kind of a U.S.-China trade truce in a lot of ways. There's no doubt there's winners and losers, though, from the U.S.-China trade deal. The clear winners, Andrew, I would say energy and tech, right? 55% of the December tariffs that were supposed to go in were very specific to laptops and cell phones and tech spending. There's a winner on business spending. This should improve CEO confidence over time. So maybe we get a little bit of that ever elusive CapEx spending picking up in 2020. And the consumer wins on this year. But there's losers as well. I mean, certainly some of the losers include the WTO. There is no enforcement mechanism here, and the WTO could have stepped into that void and been the enforcement mechanism agency, but isn't. And you've got some other areas that I think are probably going to be challenges for the markets to absorb around the losing side of this as well.
Hey, Bob, you see it, you feel it, you're with the guys on the floor there. How uneven is this? I mean, we look at the indexes and, it looks like everybody's buying with both hands, but there is an unevenness to this in terms of how it's all, happening in reality.
Well, in terms of how the market is reacting, the cyclical sectors have all been moving in the last several months. Even energy, which is a terrible performer, and it's got supply problems around the world, oversupply problems, have been moving. So you look at metals moving up, you look at global industrials moving up. Another one that I look at a lot is high yield market. That's a real proxy for how people feel business is doing in the United States. And those have all been moving up in the last several weeks. That's a play on credit, not a play on interest rates. And we're near highs for the year on those.
Daryl, what don't you want to touch right now? If somebody's looking at this market right now thinking, you know what, I missed the train, I got to get on the train, 2020 feels, I mean, what Bob just said about the VIX, how low things are in terms of volatility, I should be on this train, but there are elements of it, I imagine, or at least certain cars of this train you may not want to be on.
Yeah, I think you have to stay away from some of the more defensive sectors like utilities, staples, REITs right here. I just don't think they make a lot of sense. A lot of them are trading at rich valuations. We've actually, for the majority of the year, been underweight small caps as well. The earnings growth and the fundamentals just don't look well there. They're underperforming the S&P, the Russell 2, even though it's setting a new all-time high, is still underperforming the S&P by 600 basis points. What's interesting, too, about trade is we got nothing from China on rollbacks of their tariffs, right, on U.S. products. So any companies doing business over in China, those multinationals trying to export to China, they've got no relief in this kind of a deal right now. So I think you got to fade those as well.
Hey, Bob, we got to run, but final word to you because I want to understand this. There's some technical factors that always go on in terms of trading into the end of the year. Certain funds want to be in certain names. Certain funds want to lock in their gains. There's tax harvest. There's all sorts of things happening. What's the one thing that the average investor needs to understand about all of that?
That the roll is generally positive going into the close. December last year was such an outlier. It almost defied any rational expectation for what normally would happen. The roll is generally positive. I'm talking about futures roll, which will happen at the end of this week, as well as going into the new year. That's what everybody should understand.
Good lessons there. Gentlemen, thank you both for hanging out this afternoon with us. Meantime, I want to get to Chicago. I want you to take a look right now, though, at shares of Boeing. They're down nearly 4%. This follows those reports in the Wall Street Journal that production of the 737 MAX could be cut or halted. Phil LeBeau, he's confirmed it all and has even more details about where all this is headed. He is live in Chicago with the latest. Phil.
Andrew, I'm not sure we'll get an announcement this afternoon, though it is possible after the bell. that we could hear from Boeing about what it plans to do with 737 MAX production. We do know that the board of directors meeting here in Chicago, now this was a regularly scheduled meeting, they are looking at the production plans for the 737 MAX. I'm told from sources familiar with the discussions that the board is more likely to outright halt production as opposed to slowing it down any further. And here's one of the issues to consider. All of the planes that have been built since March that are on tarmacs or out at Moses Lake or down in San Antonio that are waiting delivery. They've got about 450 of those. When you take a look at Boeing's monthly 737 MAX production, remember, it's at 42 a month, the lowest rate since 2016. We show that 57 there because that was the plan. This year, they were supposed to build 57 per month. By the way, the last time they had a production halt, 2008, when there was a machinist strike for about 50 days, approximately 12,000 workers are out at the Renton plant building the 737 MAX. Now, how many of those might be allocated to other plants or might have to be furloughed? That remains to be seen if they do a full-on halt of production, Andrew.
Hey, Phil, very, very quickly, stock down about 4%, as we said earlier. What's the knock-on effects, though? It's not just Boeing, right? There's the folks who make the engines. We're talking about General Electric. You can go down the line. Who else should, if you're playing dominoes, who should we be paying attention to right now?
Spirit Aerosystems, really anybody who's attached to the 737 MAX. So your biggest suppliers, Spirit Aerosystems out of Wichita, which makes the fuselage. And that pretty much is a stock that trades in tandem with Boeing. You've got GE, which makes the 737 MAX engines as part of its joint venture with Safran. And then you can look at all of the other suppliers, whether it's TransDigm or whether it's UTX or Honeywell. They all have a part in there. Now, those guys are not as much, don't have as much exposure as Spirit, but clearly there is going to be a knock-on effect. And then, you know what you don't see in the stock market, but is clearly a concern, Andrew? The smaller Tier 2 and Tier 3 suppliers, particularly out in the Pacific Northwest. I mean, those are folks who, if there's a halt in production, then the question becomes, will they have to do something with their workload? And will they ultimately have to potentially furlough some workers?
Okay, Phil LeBeau, thank you for breaking all of that down to us. And we'll be watching and awaiting an announcement from the company. Meantime, here's what else is ahead on the exchange.
Coming up, there's a lot of talk about breaking up big tech. But is that really the best solution? One expert says no. It's time to regulate them like utilities. He'll join us next. Plus, 20, 30, 40, even 50% off. It's the worst year for discounting since 2008 for retailers. We'll look at what it means for the stocks. And Amazon and the NFL want to create a digital athlete platform. This is The Exchange on CNBC.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Tonight, TuneIn has your Monday night NFL football with the Indianapolis Colts at the New Orleans Saints. Kickoff at 8:15 p.m. Eastern.
1st and 10 from the 18. Breeze in the gun. Niners bring pressure again. Breeze throws over the middle. That ball's caught. Traquan Smith into touch. Smith over tackle. Into the end zone. Traquan Smith.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Hey, tune in listeners. Steve Kornacki here from NBC News. I want to tell you about a podcast I'm hosting called Article 2, Inside Impeachment. It's dedicated to bringing you the latest developments on the impeachment inquiry into President Trump. Every Monday, Wednesday, and Friday, I talk to NBC News reporters who are closest to the story to break down what's new, what matters, and what it means for the 2020 election. Search and favorite Article 2, Inside Impeachment on TuneIn.
Welcome back to the exchange. One of the big topics in Washington this year has been the push to break up big tech, and that narrative likely to continue into 2020. But some say the move would be difficult and may not be the solution. Joining us right now is a man who says that very same thing. James Cortada, he worked at IBM for 38 years. He lived through Big Blue's 13-year antitrust battle with the Justice Department. He is out with a new book, IBM, The Rise and Fall and Reinvention of a Global Icon. It explores that legal battle and lessons for tech companies today. Good morning to you, James. Congratulations on the book. I want to really try to draw some parallels to your own experience, to where we are today when you think about big tech. And I'm thinking about the Amazons of the world. And, people don't talk about Microsoft in this context, but Apple, obviously, Facebook, you can go down the line. You don't think that breaking up big tech makes sense, that that's not the ultimate answer from a competitive perspective. Why?
Well, the two reasons. One is they're very convenient to have these large platforms, particularly Facebook, where you can reach out to literally billions of people. So why would you want to give that up? Second, you do get cost performance, particularly from Amazon, in a lot of the goods and services that it sells. So it's convenient for the consumer. On the other hand, there are also problems with that. In the case of Facebook, we worry about the kinds of information we're getting, whether it's accurate and precise. In the case of Amazon, is it crushing bricks and mortar companies? And also, what are they doing with our data, our privacy?
Well, let me ask you a separate question. One of your answers, I think, and I don't want to put words in your mouth, is an idea that ultimately they should be regulated, therefore, not broken up, but regulated as a utility. And my question is, if you do that, do you believe that they can innovate at the same pace and level they have before?
Yes, they can, because the innovation involves expanding to different markets and around the world, and that can be regulated in the sense of...
But if I have a regulator literally sitting in my office the way some of the utilities do, frankly, the way some of the banks do, and they're sitting right on my shoulder and they're looking and they're telling me everything I wanted. If Apple wants to add something new to the App Store and they have to call somebody on the phone and ask them permission first, what does that do to the culture?
Not necessarily. You only regulate the things that need to be regulated. For example, what they do with your information, your personal information. Do you keep it accurate? Do you get permission? The Europeans are authorizing these companies to do all kinds of new things, all kinds of innovative things, but they're also asking them to gain permission from you and I before they do anything with that data.
Those are standard rules you can put in place, but I'll make it more complicated. Yes. There was a piece in the New York Times over the weekend about Amazon and their AWS cloud service.
Right.
And this idea that they are advantaging their own services, if you will, over that of third parties. By the way, this is a similar issue, though different than some of the issues on their marketplace, the retail marketplace, where they advantage their Amazon branded product over a third party. In the case of AWS, I should say it's all open source, so there's an issue about whether that model works at all. But anyway, the bigger issue here is, do you want them to be able to do those things? And I'm not sure that's just about setting a basic rule. I think you'd probably need real regulators in there talking to them all the time, no?
They talk to them all the time now, and they have for many years. This is not new. The conversation's been going on for a long time. They have lobbyists, they have regulators to deal with. They're doing it in Europe, and they're doing it in the United States, they're doing it in Japan, probably in China, although it's not clear to me exactly what that looks like. They're doing that now.
Do you buy the Mark Zuckerberg argument, and you're hearing it now in Silicon Valley a lot, that if you try to break us up, hinder us, slow us down in any way, what you're really doing is that you're advantaging the Chinese?
See, I disagree with that.
I'm saying that, but that's not my argument, it's Mark's.
Right. I would say that if I were sitting in his shoes, but he's also been able to demonstrate he can get to 4 billion people and that he continues to grow the business regardless of whatever the Chinese are doing. And the Chinese are growing as well. And the world's population is growing, as is the population of people using Facebook. I don't see Facebook slowing down anytime soon.
James, if you're a betting man, we got to run. If you're a betting man, because we have investors who watch the program, do you think the government's going to go after any of the big FANG companies?
I think so. Over the next 5 years, you're going to see first regulation, and then there may be some spin-offs. It won't be anything dramatic because it doesn't make sense to. And in the end, it just takes a long time to break up a company, and it hasn't been done since 1982 with AT&T.
James Cortada, the book, IBM, The Rise and Fall and Reinvention of a Global Icon. It's great to see you this afternoon, and thank you for the conversation.
Thank you.
When we come back, a lot more right here on the exchange. Shares of Horizon Therapeutics, they are higher following good news from the FDA. That took place on Friday for one of its drugs. The CEO is going to join us live with a closer look at the drug in question, the impact on his company and the industry, plus the politics of flatware. I love this story. Elon Mui is here live in Sherrill, New York with that story. Elon.
Well, Andrew, I am at Sherrill Manufacturing. It is the last manufacturer of utensils in the USA. They make forks, knives, and spoons. And I'm going to give you the scoop on why they're about to win big. Coming up next.
I'm George Kurtz, CEO of CrowdStrike.
You know it's out there somewhere, but you just keep missing out. I'm talking about your dream job. Now it's easier to find and land your next role with the LinkedIn app. Build connections, keep in touch, and be the first to hear about new jobs. LinkedIn has more openings than applicants. And sometimes all it takes is one LinkedIn connection to land the job that's right for you. Don't miss out. Get your next big break and find the job meant for you. Download the free LinkedIn app today.
Ho, ho, ho. Who's made a list this year? I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchase by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Be honest. How much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention. Because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18 plus. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium. Upgrade today.
We're back on the exchange. I want to give you an update right now on the markets. The Dow off the highs, but still up 0.5%. 202 was the high of the day. The S&P now up 26. The NASDAQ leading up now more than 1%. Want to get over to Sue Herrera. I love seeing Sue Herrera. CNBC News update. Hey, Sue. Nice
to
see you.
See you too. Thanks, Andrew. Here's what's happening at this hour, everyone. Senator Lindsey Graham says President Trump will announce an American troop drawdown from Afghanistan this week. Speaking from Kabul, Graham said said the number could be reduced from 12,000 to 8,600.
Our goal is to withdraw our forces based on conditions that would warrant withdrawal. We cannot withdraw in a fashion to allow international terrorism to rear its ugly head again in Afghanistan.
Thousands of students flooding the streets of New Delhi to protest against the India Citizenship Amendment Bill. Demonstrations have taken place all across India. The law gives citizenship to non-Muslims who entered India illegally to flee religious persecution. And the wife of Zimbabwe's vice president has been charged with attempting to murder her husband, Mary Chiingwa, appearing in court where she was also charged with money laundering and fraud. She was ordered to remain in custody pending a bail hearing. I think I may have mispronounced her name, but you got the drift. That's the news update this hour. Andrew, back to you.
Sue, I do it every day, as you know.
Oh, no.
Me and names. The teleprompter is not my friend. Sue, thank you.
Thanks.
But let's also tell you what else is coming up on the exchange this afternoon.
Okay. Merchandise hasn't been this cheap since 2008. It's not discretionary spending that's racking up credit card debt. We'll tell you what is. How's this for a gain? More than 100% in 3 years. The CEO of this mystery stock joins us. And the politics of flatware. It's all coming up on the exchange.
As a principal, I can tell you this.
My name's Ian, and I run the Christmas Centres for Crisis. Many people in Britain are homeless, stuck in hostels, sleeping on floors, even on the street. You can change this. Our Christmas Centres provide people with food, safety and support, and show them how Crisis can help them find a home and a job in the year ahead. You can reserve a place at Crisis this Christmas for just £28.87. Search Support Crisis Reserve and help someone take their first step out of homelessness this Christmas. Thank you.
Ho, ho, ho. Who's made a list this year? I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Dear Dad, Merry Christmas. Thank you for always doing everything you could to make this time of year special for us. No one has a Christmas jumper collection quite like yours. Your festive spirit...
Gingerbread latte with 2 shots and nutmeg whipped cream for Joe.
I hope it snows. I know how you love a white Christmas. All my love, Joe. Heartfelt can happen anywhere with moonpig.com. Download the app and get 20% off when you buy a card and gift this Christmas. Use code Heartfelt20. Exclusions apply.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
In Washington, D.C., there's only one word in everybody's mouth: impeachment. As the impeachment process moves on to the next stage, don't miss history unfolding on TuneIn. Wherever you are when the latest witness takes the stand, you can listen to every hearing live as it's happening on Capitol Hill. And between hearings, turn to stations like CNN, MSNBC, and Fox News Talk for bombshells, breaking headlines, and bold analysis every step of the way. Search Impeachment News on TuneIn to hear the latest.
Welcome back to the exchange. We're about to play a good game. We're going to catch up on a few stories that should be on your radar. It is time for Rapid Fire. We can play Rapid Fire Bingo if you want today. Here are the stories who's going to be breaking those stories down. The players in our game today. Robert Frank is here. Rael Solomon is here. And Eamon Javers is here.
Thank you. We're playing in the house. So much pressure. There's going to be a winner and there's going to be a loser. I think
trust me, there are winners and losers.
I'm going to be the loser.
I'm going to tell you about a winner, though, right now.
Okay,
it's our first up on the game. Citigroup upgrading Goldman Sachs. So they're a winner today from buy to neutral, or I should say to buy from neutral. The firm also hiking its price target on the bank, implying a nearly 12% upside. What's behind the bullish call? Citigroup sees limited downside for Goldman Sachs, noting it's in a better position to weather the low interest rate environment than other banks. Shares of Goldman Sachs are up nearly 37% already this year, folks. So they are the winner. The question is, can they keep winning?
It's up 37% this year.
Yes.
Over the past 3 years, it's basically flat. This is a bank that the best argument you can make right now is it's really cheap.
Yep.
It's unlikely to get that much cheaper.
Okay, so this is just a downside story in your mind.
Yeah.
Although, to be fair, I think we also heard Josh Brown say during the halftime report that this is a bank that's undergoing a major transformation. We're seeing Goldman Sachs start to move into spaces that previously people never would have expected Goldman Sachs to move into, providing banking service and credit cards to people who may not have the best credit scores. And so I think Goldman Sachs right now is a really interesting story.
But do you think, I mean, you've seen this incredible, some would say, fall from grace. This was the white shoe masters of the universe now hawking credit cards. Do you think
the gamble has to be whether they can make the consumer thing work? What I don't get, I will say this, and I don't understand, all of the hype around this Apple credit card with Goldman. Have you seen this thing advertised anywhere?
No.
You walk into an Apple store and see them talking about it? No. Tim Cook, what are you doing? I think about this all the time because I think this was supposed to be this sort of game-changing thing. Now maybe it becomes a game-changing thing.
But Goldman, I think Goldman is safe to be boring again, right? I mean, remember how they were at the white-hot center of the political universe, my perspective in Washington.
The vampire squid.
Yeah, the vampire squid after the crisis. They were on fire politically. And now, in an era in which you've got a president who tweets, companies are on the receiving end of this all the time, Goldman is nowhere to be seen, and that's probably exactly where they want to be. Very, very under the radar, oddly enough.
Okay, who won that round just now?
I think you did.
Okay, so 1 point.
I did.
Okay, we're going to give 1 point to Rahel. 1 point to Rahel. Now as the game progresses, we're now going to talk about
negative 1 point.
We're going to talk about discounts, so we can talk about up and down here. We all love them. I love a discount. I'm like the cheapest of all cheapskates. You know that.
Really
retailers offering some of the steepest discounts since 2008. This is what I've been waiting for, averaging around 27% last week. While this might seem like a good deal for shoppers, industry experts warning that the markdowns will squeeze margins and put some companies at a higher risk of default. Sometimes I think when I'm being so cheap that maybe I should think about the other side. I should have more sympathy for what I'm
shareholders?
doing.
Well,
for the shareholders,
the people who want your money.
Yes, because I'm waiting. I'm trying to like rob the store if possible. I don't want. I mean, not really rob the store.
Right.
Just saying.
No, but we're also seeing this in some research notes, right? So Deutsche Bank put out a note in early December for Ulta specifically saying that they were a little concerned because they were seeing elevated discounting of promotional activity last quarter. Now, granted, Ulta had a great quarter, but then we also saw some of its competitors start to try to keep up. Right. And so you're right. It's great for consumers and hooray for us, but it squeezes margins.
She almost has won the round without you guys.
I'll give her that. I would just add, every single year it's the same pattern. We see holiday sales are going to be terrific, up 3 to 4%. Then right before Christmas, things are really disappointing. It looks like they're going to be down. And then after Christmas, turns out everything was up 3 to 4%. Every single year it's the same pattern, and I think we're seeing the same thing again. It's going to be a fine year. Consumer confidence is strong. Wages are strong.
I love you. She just won that round too.
Of course she did.
Next round, though, we are on.
I'm never coming back.
This round, though, I think could actually go. This is up your alley where we're going in the next round. Right. This is all you. This is all D.C.
A lot of pressure.
Senator Elizabeth Warren sitting down with CNBC's John Harwood, and she had some very harsh words for American corporations.
I am proposing something called accountable capitalism. You may remember that for more than a century, American corporations owed multiple duties. They owed duties to their investors, but also to their employees, to their customers, to the communities where they were located, to our country. And then in the late 70s, an economist comes along and says, hey, here's a novel idea. How about if you only owe any kind of duty to your investors, which means make it all about profitability. That means that American corporations today, these giant corporations, they have no loyalty to America or to American workers.
Okay, what chance does she really have? That's my question for you.
She definitely has a chance, right? I mean, last time around, we thought Donald Trump never had a chance, and he definitely did have a chance.
Yeah, but he was ahead in the polls almost
you just can't, from this media environment, with this kind of political chaos that's out there, you just can't write anybody off right now.
Okay, so
even if they're flatlining.
Okay. There are Democrats, I'll call them Wall Street Democrats, that don't really like Elizabeth Warren, but they really don't like the president. And some of them say, I'm going to hold my nose for Elizabeth Warren. And if she was even in this role, I won't worry too much. She's going to do any of these things that she's talking about because she won't be able to. What can she actually do without the help of Congress?
What she can actually do depends entirely on how big her coattails are. If she gets in and gets a Democratic Senate and a Democratic House that feel beholden to her, there's a lot that she can do. If she gets in with Republicans controlling either house, it'll be gridlock for another 4 years, not much. It'll be a lot of rhetorical points scored. But I've been waiting for the left to do this for a while. I've been waiting for them to come up with a Laffer curve of the left, basically saying if we spend money, we're going to see an increase in GDP over the long term and measure that out the same way that the right sort of used the Laffer curve to justify tax cuts for a generation.
Accountability of capitalism can be that?
I mean, she says she's a capitalist to her bone. What I do think is she's clearly striking a nerve, right? I mean, this story on CNBC's website is one of the top trending stories. Within 6 hours, it has almost 30,000 views. So I think, my personal opinions aside, clearly a lot of people want to hear what she has to say.
To Amos' point, though, let's assume that she believes this, and let's assume there's even a will to do it. What can you legislate to make companies be responsible to communities, to employees, to all these other constituencies?
Good question.
And there, I think what they're doing now, the Business Roundtable statement, and everything else.
You think they're doing it already or no?
I think they're doing it because they're being forced to by the millennial employees and by customers.
Is it real or is it marketing?
It's opportunistic, it's marketing, but it's moving in the right direction. I just don't think you can legislate what she wants to do.
One quick thought on this. I mean, every election year is about the economy, stupid, famously, right? This one's going to be more than that. 2020 is going to be about the economy, yes, but it's also going to be about capitalism itself. This debate that we've been having at CNBC is going to be on the campaign trail front and center.
Okay, I know they're going to kill us because we have other things to do, but can you vote on the economy and at the same time look at this good economy? It's hard to not look at this economy, not think it's good, and then decide that capitalism is terrible. I just posit that with you.
You absolutely can. And it maybe because the good economy gives you a little bit of license to say, okay, how should we make this perfect? Ultimately, this is going to be a debate about the future of capitalism, and there's not going to be sort of a centrist Republican Chamber of Commerce type figure.
Amy, you won already. You don't have to keep talking. You won already.
Okay.
Quit already. Amen.
She's got 2 points.
Okay.
You've got 1 point. You want to tie just to be...
No, Eamon won that one.
No.
I'm going to go against Elon. I'm going to...
Okay. Should you just go now, Robert?
No.
Okay, I got our final round
here. Off the island. What happens
you got to hear that. No, we're not done yet. We got more to the story.
I thought we voted him off.
The success of a business can hang on the whims of lawmakers in D.C. And Elon Mui joins us right now to tell us about a curious story of such a company. Good afternoon.
Hi, Andrew. Well, I am at Cheryl Manufacturing, and this machine is known as the nipper. It is one of the final steps in making a piece of flatware. It removes the bar from the top of this fork and ends up with this finished product. Now, pretty soon, our friend Jeremy here is going to be joined by a lot more workers at this factory, and that's because the new defense bill will require the military to purchase flatware that's made in America, and Cheryl is the only company that can do it.
Manufacturing is a very important strategic asset for the United States. We need to keep as many factories making things in the U.S. as possible.
Now, you might be wondering, how did this provision even get into the defense spending bill? Well, it just so happens that this district is represented by Democratic Congressman Anthony Brindisi. He's a freshman in a very red region, and he's someone who's been on the fence about impeachment. So, guys, let's just say that House leadership has a vested interest in making sure that he's happy. Back over to you.
Elon, I just have a question. I read that the factory, if this comes through, their orders would go from 1 million to maybe 2 to 3 million, but they would only add 5 to 10 additional workers beyond their existing 56. Is that right, that all of this would only add 5 to 10 workers to that plant?
Yeah, what they're telling me is that the number of workers is actually much larger, that they could possibly add 20 to 30 workers if they get that number of sales. So, back in the day, this factory was employing something like 2,000 people. It was the largest employer in Oneida County here in central New York. Clearly, those numbers are coming down, but this area is looking for jobs, and this could be one way to provide.
How does that play politically?
Well, everything is local politically. I always wonder why any congressman would ever commit publicly to anything in advance when you can get all these little goodies in a bill at the end of the day. The question is this little provision going to move that congressman on impeachment? I don't think so.
Oh, Elon, before you go, it's the question that I was asking the whole time. Are all forks made with that little bar at the top that they have to take off? Is that how these... I never even knew this.
Yeah, well, eventually, this is why this bar helps hold the fork in place so they can make the rest of the product. And when they're done, they need to take it off so that you can actually
I like that kind of fork better because you can put more stuff on it. So I would prefer it with. I want to buy it with the bar at the end.
It's hard to twirl the spaghetti.
It's good for your diet. It keeps you from eating anything.
Elon, thank you for that. Robert, thank you. Rahel, I think, is our winner.
Yeah, Rahel.
Right?
Well, this is a first.
Eamon, thank you.
I'm the biggest loser.
No.
Loser.
Robert's the biggest loser, but I'm going to be back later this week, so we'll play again.
Oh, good.
Okay, you got a deal. Thank you all. Appreciate it. Meantime, millions of Americans have faced financial trouble in just the past year thanks to crippling medical debt. We're going to take a deep dive into the numbers. We'll do it after the break. But before we do that, take a look at shares of Tesla right now. That stock is on pace for its best day since October and its highest close since August of 2018. Mr. Musk can be happy. This follows news that Mercedes is delaying the U.S. launch of its electric SUV. The exchange is back with more in 2 minutes.
As a small business owner, making payroll was stressful.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Welcome back to the exchange this afternoon. New research showing that more than 137 million Americans faced financial hardship in the past year because of one thing, medical debt. Sharon Epperson joins us right now with more on how many Americans are tackling, or not tackling, frankly, this debt burden.
It's
Good
a big
afternoon.
issue.
You bet.
Big issue. Americans are spending more on health care right now than any other developed country. On average, almost $17 for every $100 we spend goes to health care expenses. And when it's an unexpected medical bill, many are using plastic to pay for it. 1/3 of cardholders are in credit card debt because of medical bills, according to CompareCards.com. And their survey showed that nearly 60% said they used a card because they had no other way to pay for it. 15% owe between $1,000 and $5,000 in medical debt on their card. Now, some are using a medical credit card to cover out-of-pocket expenses. It's often interest-free for a few months, but after that, you then have to pay off the full balance to avoid deferred interest. And the rate on a medical credit card, Andrew, 27%, which is about 10% higher than the average credit card.
That's like usury rates. Here's the thing, or the question that I really have, which is, if you're in one of these situations, is there any way out? Is there any alternative to what's going on here?
Well, there are ways to try to negotiate and dig yourself out of this debt. And one of the first things you need to do is just negotiate with the provider if you can. Ask them if there's any way you can get on a payment plan, do monthly payments so that you can have something that's more affordable for you. And then also, if you have it on the credit card, get out of that high interest rate credit card and put it on a zero balance, do a balance transfer for 0% interest or a lower rate card. And then the other thing is, this is the best part, you may need somebody to help you. So if you can't deal with the bills yourself, and you may be under medical stress that you can't deal with them, get a medical billing advocate.
I recently spoke to a doctor who said that people these days sometimes now try to negotiate with them in advance.
Oh, absolutely. You can do that.
People don't know to do that.
I walk in like the sucker. I don't even usually know how much it is. They just do it and they hand you the bill as you walk out the door.
Exactly. You can do some research and figure out how much does this procedure normally cost. How much, you can even ask an insurance company, how much does it cost also in my area, because the average may be different depending on where you live. And then tell the provider, listen, I can pay this, but it's going to take me 10 months to do so. Can we get on a payment plan?
I like that strategy.
Yeah.
Thank you, Sharon.
Sure.
It's good to see you. Appreciate
Good
it.
to see you too.
We are going to talk about shares of Horizon Therapeutics. I want you to see what's going on here. They're climbing today, up now more than 70% this year as one of its rare disease drugs gets a positive FDA panel vote. We're going to talk to the CEO of that company right after this short break.
You know it's out there somewhere, but you just keep missing out. I'm talking about your dream job. Now it's easier to find and land your next role with the LinkedIn app. Build connections, keep in touch, and be the first to hear about new jobs. LinkedIn has more openings than applicants. And sometimes all it takes is one LinkedIn connection to land the job that's right for you. Don't miss out. Get your next big break and find the job meant for you. Download the free LinkedIn app today.
Christmas, a time for celebrating, unwrapping, and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back to the exchange. Shares of Horizon Therapeutics, they are higher now. This is the second day after it received a unanimous vote of support from an FDA advisory panel for its rare eye disease drug. It's a big step towards gaining final approval, with the FDA expected to make a decision by March. And meanwhile, Horizon's seen some major gains, up more than 100% in the past 3 years. You can look at that chart. It's a thing of beauty. Joining us right now is a CNBC exclusive Horizon Therapeutics Chairman, President, and CEO Tim Walbert. He probably also thinks it's a thing of beauty, along with CNBC's biotech and pharma reporter Meg Terrell. You're the expert, Meg, so begin. Take it away.
Well, thank you. And Tim, thanks for being here.
Hi, Meg.
So tell us about what disease this drug aims to treat. It's a rare eye disease called thyroid eye disease. Just tell us about that. And this would be the first drug to treat it, right?
Sure, yes. There are no FDA improvements, medicines approved at this point in time, Meg, and nothing is helpful to these patients at all. And this is a disease that's characterized by significant inflammation behind the eye, and that actually causes the eye to significantly bulge out, These patients get double or blurred vision, misaligned eye, and all these patients go on to get between 3 and 5 surgeries per eye. And it's a very debilitating disease that up to 6% of patients can actually go blind as well.
So the FDA is set to decide by March on whether to approve your drug. It doesn't have to follow the advice of this outside panel of advisors, but of course it often does. And one thing we've been seeing recently from the FDA is it's been approving drugs way ahead of schedule. So what is your expectation as to what we might see from the FDA? Also in terms of the potential label for the drug, how broad could it be?
Right. So we have seen 5 medicines approved early over the last few months. Our PDUFA date, our action date, is March 8th. So we're still counting on that date and expect to continue to work with the FDA through that period. And we see significant opportunity with this medicine. It impacts, we expect, about 15 to 20,000 patients each year that would be eligible for teprotumumab, and we've guided to over $750 million in peak sales with this medicine. So really exciting opportunity to help these patients with a significant debilitating disease.
What's the cost going to be?
We have not set, as you heard at the advisory committee on Friday, there is significant value seen by the physicians and need by the patients. But after we get approved, we'll discuss the eventual price.
So I think Jefferies put out a number. Yep. They say, conservatively speaking, maybe $100,000 per course. And of course, this is a rare disease drug, and that's not out of step with what we often see in that space. And Tim, I want to ask you more broadly about drug pricing and your approach now, because as a company, you've really pivoted over the last few years to focus on rare disease drugs, which have such high prices. Why was that the right move when drug prices are in such focus politically now?
Well, I think the key thing is the value, such as a medicine like teprotumumab, what it can do for patients, and ultimately the key thing is the out-of-pocket cost for patients, and there's been many bills posited. The key thing as we look at it is ensuring that the patients have the lowest out-of-pocket costs possible, and ensuring access. We've given away this year in 2019 almost $2 billion in free medicine to patients. So the key thing is having responsible price increases and making sure that we continue to create access at the lowest out-of-pocket cost possible to these patients.
Okay. Tim, we will continue to be watching this story. Congratulations. We wish you luck on the rest of it. Happy holidays. And if this happens before March or happens in March, we hope we will see you here first. So there you have it.
Thanks so much for having me. Really appreciate it.
We got a lot more coming up on the exchange. The NFL teaming up with Amazon to help keep players healthy. You should stick around for this. You'd like this story, Meg. The details and what it means for the future of football. We're going to do it right after the break.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho. Who's made a list this year? I want a new phone. One with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
A lot of people